I'm on board 100%.
All right, guys, welcome to today's options workshop with Nic Chahine. We're going to be starting here in a couple minutes. Just wanted to let you know, give you the update here. So we'll be starting here in about 10 minutes or so. So just get ready. We'll be getting started soon, guys. All right, guys. So we're going to start here a couple of minutes earlier. I know you guys are ready and excited to start. And so am I. And so is Nick. I believe we have him in the back. So we're going to get this started here, guys. And let us know in the chat. We just want to see where you guys are from. So let us know where you're tuning in from, city, state, country. Let us know where you're looking at. Let's get a glimpse of where you guys are from. So let those tickers run there, guys. And in the meantime, Nick will be setting up his charts, and let's take a look here, see where you guys are coming in from. Dallas, New Jersey. Keep them coming, guys. Chicago. We got people from all over. Nick, are you there? Can you hear me, Nick?
I can hear you just fine. I was letting you do the intro with your professionalism.
What's up, man? How are you doing?
Tough day. Not so much the scoreboard, but it was just super busy in the chat room all over the place.
Yeah.
But you know, there were opportunities today, and there will be some tomorrow, and just busy.
Right. Good stuff there, man. Absolutely.
We have a lot of distance in our chat room. In our chat here in this webinar. I see people from all over the place. We've got Indonesia, Myanmar up there, Germany. I mean,
it's the same guy. That guy, Micro. We always have one person from Germany. I'm starting to think it's always him. Micro.
India, look at that. We've got everywhere. My yacht. What are you doing then? Tell me what you're doing to get a yacht.
All right, guys. So I'm gonna launch a quick poll. This is called our Zinger sentiment indicator, and everybody should have gotten a poll right now. The question is, what do you think is the main theme moving the markets? So go ahead and make your selection, guys, on Zoom. We're gonna show the results here in a little bit once we get everybody in. The votes are coming in. This is moving pretty wildly.
Delaware. Delaware was the first state I set foot in. Actually, check that. I did land in LaGuardia, so it wasn't. But the first state I lived in was Delaware in the U.S. Somebody's from there.
Yeah, this is pretty interesting to see people from all over the world really, have an interest. Oh, wait, let me take that off.
Time to get up.
Yeah.
You know what time it is? It's time for me to take an energy drink. I'm like running on empty here. Hold on. Let's see how that works out. California, fellow Californian. That's where I'm at.
Yep. Let's look at this poll here. So we have 71% of participants have answered. Let's give you these guys a couple more minutes here. We have about 147 votes from 206 people that can vote right now. So keep those. Yep.
I'd like to move to Texas so I can park on my front lawn. So over here, there's so many restrictions. It's unbelievable.
Yeah. We got some people answering here about.
Okay, I don't see the answer, so you're going to have to tell me all about it.
All right. So we have 73% of the participants here. Go ahead and make your final vote before I show the poll results here, guys. And this is going to help us see where retail traders here, Benzinga universe, and mostly retail traders are with their thought process here. So, all right, we're going to end the poll in like 2 seconds. So go ahead and fill that in. And that is it. So we're going to share the results here. Can you see that now, Nick?
I can see the results. Yes. So Zinger sentiment indicator. Earnings, supply, all of the above. Well, I have no idea. Well, I think I can share my opinion.
Yeah, go ahead. All right, let's see what you think on this.
So you can still see my screen, right? So here's the thing. Usually, under normal circumstances, to me, there are three things that drive the stock market. Number one, we have to have the structure. Nothing is broken, so we can function. Like on the flash crash, everything broke. That's one thing. So nothing is broken. The whole world, at least this country, is operating. So the second one is liquidity, money moving around. And we haven't had this much money moving around ever. I mean, this is so much money. When you use the word trillion, I'm going to give you a tangible how much money this is. I used to use it as a silly thing, but it is such a big number that if you ask 100 people on the street, I bet you 95 of them wouldn't know what comes after a trillion. So that's how big that number is. We kind of like skipped over a billion way too fast. So if you accumulate or spend $1 million a day, $1 million a day, it would take you 2,740 years to get to 1 trillion. So it is a huge number. So that part is going to land somewhere. If we have 5 trillion that the government injected, I don't know what the end number was. I know it's more than 3. I know it's less than 8, somewhere in the middle. So 5. It is a lot of money that has to land in somebody's P&L at some point in time. So those two things are working. So the only variable moving stocks right now is sentiment. That's it. Investor sentiment, because we know we have money. We know we have the Fed is behind us. They didn't stop the QE. They announced maybe unofficially a taper. The taper is not the end of QE. It's the start of the end of QE, meaning the QE is going to last until the middle of next year or longer. And they're still at low rates. Maybe they'll hike once next year, maybe not. I think not. So they are still a QE. And if we need it, they'll come back with a QE. He did it in 2018. Powell said he was raising rates, buying back assets. The anti-QE is called the QT, changed his mind. So the only variable, my answer would be none of the above. The only variable is investor sentiment. If you take sentiment, if you turn off all the news, would people be buying or selling stocks? If you just turned off all the news right now, people would be buying stuff because all the companies are turning in P&Ls like you wouldn't believe. Even stocks that fell on their earnings. Who was it? PayPal? I forget who it was. Anyway, I did a video on it. They fell on earnings because they missed estimates by like 2% or whatever. Meanwhile, they grew, Snap, they grew everything, double digits, more, 50% on this, 200% on profitability. User metrics were up 25%. Yet they concentrated on, they missed somebody's estimate. And they shellacked it, however much it fell, 20%, 25%, whatever. So sentiment is what's driving prices right now. Perception, sentiment, human factor. That's it.
We can add that. We're going to add that here to the Zinger sentiment indicator. And I guess for now, what we can do is that we can possibly, there's a couple of topics here that I want to discuss. We'll do that later on, but let's get a general overview really of what you are seeing in the markets, what you're looking out there, what's going on in the chat room with your members there.
Okay, so we discuss every day. I discuss everything every day. A couple times a day. I pop in first thing in the morning, at dark o'clock my time in California, before the markets open. I share my plan for the day in the chat room. So I pop in here. If I can scroll high enough, it'll be a plan for every index, the major indices, and a few futures. So this was the pre-open. Okay, my plan. Nope, that wasn't. There we go. So the plan for the day, and I share it: SPY, QQQ, IWM, the futures, and an earnings snapshot, and a blurb as to what I expect. So that's how my day starts. And I always touch back on who's controlling the price action, because that's super important. So we're looking at the SPY chart. This is an all-time high. That's a weekly chart. Nick, you're saying, show me the daily. Okay, the bull's in charge. They're buying every dip. You can see it. They're buying every dip. This dip in September lasted a little bit longer than the other ones, but they bought it. So now we're trying to break out of our prior fail, which wasn't a high back then. We got above it. Now we're coming back to test it for footing. This test can extend to 446 or 445. It'll likely stop around 450, but if it comes down to here, guess what? I'm going to be buying the dip, and that's my sentiment. I share that every morning. And throughout the day, we update and we track some faster moving things, some breakouts. Today we had a few setups. Some worked out great, others didn't. And then my internet went out, first time in forever. And of course, I couldn't stop myself out of a couple of puts, a couple of calls. And so I suffered small loss that I didn't need to, but it happens. So all of this, the overall picture, bulls in charge. So let's look for opportunities, stocks that fall into support. Like today, Visa came up in the chat room, and then it came up again. So yesterday, what did I share in the chat room? Maybe you remember. I shared a video about how to deal with Visa before it happened. So I said, here's the report after hours. Here are the limits that the after hour move did. Here's what I would do with that. I think I did that for maybe 7 tickers. It was Visa, AMD, and Robinhood in one video. And then another video for, shoot, I can't remember, PayPal and Twitter, I think, were one. And then I'm drawing a blank on the other one, but I may remember. Microsoft, maybe. Yeah, Microsoft and Google. So I gave limits, and I said, Google above here, I would chase it up. Google into here, I would buy the dip. Microsoft, I would do the same thing. So I gave specific limits. That's what happens all day, every day in the chat room. We sit, we chat. So Visa came up a couple of times. Should I buy the dip? I said yes, but and then another headline broke out about some investigations, SEC, I forget what it was. So technically, it's falling into some support. That would be the discussion. At what point do I get in and how big? So yes, the opportunity is there, but I have to recognize that losing this point could trigger some bears to get to down here. That's just a conversation that happens. Top level discussions from the first day. At the end or middle of the day, you know, I send out a recap as to here's what's going on right now and here's what's today's opportunity. Like today, there was an opportunity in Texas Instruments. So I shared it in a video write-up complete with levels, how to buy shares or buy calls or buy call spreads or sell puts or sell put spreads. And guess what happened? I'll show you in a little bit. Immediate upside potential from the minute I sent the write-up. So sometimes they come this fast, but my goal is to have some good swing trading opportunities for all kinds of speed of traders. Somebody who's super fast, somebody who's slower. I'm a slow poke. I prefer those slow poke trades, but if they give me profits right away, I'll book right away. All right, somebody's asking about the indicators. If it's okay with you, unless you want to talk more about the top line pictures, I'll explain my charts, and then this way it'll make sense for the rest of the day. So I don't have but one indicator on this chart and just a visual reference for another. People have MACD, RSI, this and that. I just have this one here, those bars. This is first quiz. If you've never been here, if you have been in one of my presentations, don't cheat. If you've never seen me do a presentation, answer this. What do you think my number one tool is? Good guess. I know this one. Good guess, but one. No. Good guess, no. No idea. Volume. Belina, you might have it right. I don't know what you mean, but I'll give you Benzinga. That's a good tool. Volume profile. All of which price action, somebody else. Okay, RSI 50-day. No, still none of you nailed it. My number one tool, your mind. Close. That's the closest one, Michael. My eyeballs. That's it. So here's the number one tool. You have it. You look at a chart. You're debating what to do with this guy right there. Number one thing to do is look left. Just look left and see what happened the last time they were here. And if there's nothing significant, then look above it or below it to see what's closest. That's the number one tool, because what do they say? Price is truth. That's all the truths you want. You want to see where this is relative to the last time it was here, and then you start determining other things. Yes, you have to look left. Trick question. It wasn't so trick. It's the truth. That's the number one thing I do. I look at levels. Nothing beats levels. No patterns, no inverse head and shoulders. Nothing beats the level. There are no fake outs with the level. Once the level fails, it's failed. very few fake outs. Okay, so some people follow trend line breaks. Like if they draw a line between 2 points and then they see a break below the line, they consider it's a breakout. I don't. I want to see, like, this one is a breakdown from this line, but for me, it's not a breakdown until it loses this. This is solid base. Look, it served for a big rally, 10% rally, and another rally, and another rally. So why do I consider it a loss yet? The buyers, there are buyers lurking right here. So I don't consider it a breakdown, but it depends on the speed. So the number one tool are the eyeballs, and I look left to find the levels. The number two tool is, yes, volume. And these are the bars I use, not these. These are the volumes based on time, when things happened. I couldn't care less about it because they don't help me do anything. They say, oh, back then there's a lot of volume. So the same information that's down here, this tool is called the volume profile, represents them as to what levels. So I don't care when it happened. I know that everybody loves it at 190. Look, by a mile. So most of the action is at where it is right now. So it's not going to be that easy to get out. So both bulls and bears are going to be fighting it out. So it's going to be sticky. So if it's falling into a sticky situation, that provides support. If it's rallying into a sticky situation, a high point of volume, it's going to be like breaks, like mud, you know. All right, so this is the simple truth about my chart. That's it. And then a whole bunch of other stuff that I have in my head. So like, for example, if a level breaks down, then I lean into patterns. And I know the very few basic ones, but it's all the same. And I promise you, whatever tools you use, these are my tools. Whatever tools you use, if you know they're working for you, and don't have more than 3, please, then stick with them and specialize in them. And if they're not making you do stuff, ditch them. They're visual noise. They'll fake you out. So what makes me take a trade, somebody's asking, Veronica, is when I see a level, when I have clarity on levels. Like if it's falling into support, I would buy the dip and stop myself out if I'm wrong. How do I know? When it loses this, I'm out. Because that was my thesis. Support will hold. I'll buy the stock or get long, however I get long. And if support fails, my thesis was wrong, I'm out, win or lose. That's a trader's mentality. If I'm looking to own shares for the super long term, I'll take bite number 1 into support. If it holds and it starts rallying and I'm comfortable with it, I'll add to it if I want to. If it fails, I'll let it drop to where it comes down to 174. I'll take bite number 2.
Yeah, that's a very, very good approach there, Nick.
This way, I don't have to all in, all out. You know, trader versus investor, we can be both. Depends on the situation. Just you have to know why you're taking the trade, what will get you out of the trade, win or lose. So anyway, somebody said this one here, this blue-red, is a simple regression line. If you use TradingView, it's just called a regression. I forgot what it's called, regression something. So linear regression. So just mathematical representation. It's a visual thing. It's not an action thing. So I don't say like, oh, it's below the blue line, I got to buy it. It's just a visual, a sanity check.
Right. So right now, Nick, what is your overall market overview? How are you feeling about the markets right now?
In September, when we were having a correction, every write-up I did, I said they will buy the dip, and I bet you that we'll make new highs before we correct 10 or 20%. And guess what? We made new highs. So I was right about that. So I'm going to stick with it. The bulls are in charge. It's a bullish market. Until the price changes, I stick to my guns. The upside path is easier than the crash. So, but the higher we go, the more likely a correction will be a crash versus a correction. So to Wall Street, it's not so terrible, Lena, and I'll tell you why. So, but anyway, so in a second, the correction term that Wall Street uses is minus 10%. The recession term is minus 20%. So make sure when you're watching news that you know what they mean. Like a big disconnect on inflation. People say, we know we're paying more money for stuff. I know for a fact, right? I know it. But guess what? Who cares? I'll tell you why who cares and when would I care about that? Who cares? Because consumer spending, I bet you, has never been higher. And that's 70% of the US GDP. So it is, as long as the US is still consuming at these high prices, inflation is not a problem. And that's what the Fed, I don't think, would come out and say it. So they're using the term transitory, and I think nobody knows what it actually means. One time, I think two meetings ago, he defined it, and it was a flooring event for me. I was like, what? I had it all wrong. So what he means when he says it's transitory, he means the acceleration rate is transitory. He doesn't mean that the inflation is going to drop. He said, when he says transitory, it means it's going to stop accelerating at this rate. That's what he means by that. So,
yeah. And like, I think this guy is coming up for like, they might change him right now, right? Isn't his
early January, his term, January-ish is his term when it ends. I couldn't find a date. They said early in the year. So I'm going to assume middle to late January, and everybody wants him in. So I would be shocked if Biden doesn't renew his term.
Right.
So, by the way, let me see here. Somebody asked, terrible day today. You're saying terrible day today. I want to tell you that the Qs were up today. The Dow was down minus 0.4. If you're saying it's terrible, we were probably long stuff that live in the IWM, because that was down 2% almost. Which leads me to the fact that by the way, in the chat room on Sundays, we meet for a 2-hour session of charting. It's coming out to be 2 hours. I usually commit 1 hour, but it's coming out to be 2 hours. 110 tickers usually, 80 to 115 per Sunday, live charting session. And then I do the strategy video that's 10 minutes for everybody in the chat room. So what goes on in that strategy video is I tell you what I'm waiting for to go plus 10% from here. So the S&P is in a breakout, the Dow is in a breakout, the QQQ is trying to break out. I won't believe any of them until the IWM joins the party. And the IWM has been consolidating for a year. I need it to break through $231 for it to blast through these. How can you join my Sunday chat? I'm sure glad you asked. Stay tuned. I'm sure Rodrigo will get you to where you want to go. It's fun, it's educational, it's productive. Believe it or not, the gang in there is amazing. Not everybody can make it, so we record it and we share it with the people who can't.
Yeah, let me go ahead and share the link here, just for these guys that are asking. So,
it's getting late in the year. Somebody's saying, can we move to options? Sure, we can move to options. So just a quick note, give me a one if you've never seen, you don't know anything about options. Somebody's complaining about the price. Let me break it down for you. Divided by number of days, that's how long of a classroom you're going to have. We're going to be in a chat room all day, every day.
Yeah, so it looks like a lot of new.
Okay, so we have a lot of beginners to options. That's good. I'll start from scratch. All right, so first of all, this is the chat room setting. And let me see here. Everybody's pitching in. Like, I had an interruption. They thought I had a power supply interruption, so they were suggesting UPS, and I was answering about UPS chart. Teledoc, VIX, and there are opportunities in here that play out. Like, this was a short-term trade. I don't know if somebody took it. So was this. This did not unfold. It started and then it fizzled. This is a video about a Twitter opportunity, how to trade Twitter. So you can put a price on that. I think if I had the opportunity starting out, I would jump all over it. I mean, the cost, I can guarantee you, nowhere near the effort I put into it and the value that is in there. So that's my take on the somebody who says, oh my Lord. Well, every day, all day, 24/7. I pop in whenever I can. If there are questions, I answer them. Direct messages, I reply to them. So, yeah. let's jump into options. So first of all, let's define the term. Let's define the term margin, because if you've been dealing with stocks, they usually refer to margin as someone borrowing at a certain rate in order to buy shares of stock. So if I wanted to spend 50 grand, I don't want to, I'll pay 25 and then borrow 25 at X rate. That's the margin. In options, that's not the case. There's no borrowing in options. Everything has to be in the account. But it has a reputation of, oh my gosh, options are so dangerous, so much more dangerous than stocks. I will prove it to you that it's not. It all depends on how you use them. They have the propensity to be dangerous if you use them irresponsibly. So, the case is that the options came from like the 1800s, the idea of them. So let's jump in and show you what they look like. This is Twitter. We'll stick with it. This here is called an options chain. This one happens to be for December. And look, we have them for this week, next week, week after, November, December, January of next year, March, June, June of 2023, 2024. So these out here, they call them leaps. All that means is just a long dated call option or put option. I don't know why they call them leaps, and I don't actually know if there's like a number of days that they refer to. To me, anything that's out 6 to 8 months or more, it's a leap, because that's just like the end of the world as far as me is concerned of time. So I'm going to pick December. So options are contracts. Okay, so when you have a contract, usually you have a term limit on it. It's never like indefinite period of time. So this one has 51 days. It ends in the middle of December. I think it's the 17th. It's not always the 15th. It's usually plus or minus a few days. I'm pretty sure December ends in the 17th, the monthly. So 51 days on the clock. This is E-Trade practice account. I'm not recommending E-Trade. It's decent, but they all have their pluses and minuses. Do what works for you. Tastyworks and Thinkorswim are very similar. In fact, I think the same people created both. So this is the one side shows the put options. I'll define them, and the other side shows the call options. So the middle shows the price levels. So the difference in color is where current price is. So Twitter at the close was about $55. That's where price is. So this is the put side. This is the call side. Now, people think call bullish, put bearish. Not so. So let me define to you what a put is, because it's somewhat easier to explain. Let's say I own 100 shares of Twitter and I'm worried for the next month or a couple of weeks, and I want to buy protection for my Twitter. And I have 100 shares. So all I have to do is buy one put. Okay, so I'm going to, when I buy one put, I am reserving the right. It's not an obligation, so I don't have to do anything with it. I reserve the right to sell my shares at $50. So somebody's on the hook on the other end who is selling that contract. It's a contract. The seller, Red, are promising that they will buy my shares at $50, and they don't have the right to refuse. I have the right not to exercise. It's like when you buy insurance on the car and you have a fender bender, you don't file a claim. You don't have to file a claim, but you choose not to. But the person that sells you the insurance contract has to honor their end of the deal. So that's the concept of the put. Why would anybody buy a put? That's one reason. And that reason explains it. When I buy a put for the number of days, 51, the cost is $1.40 per contract. Every contract represents 100 shares. That's always the case. So the cost out of pocket here is $140. So if I go to order it, it says debit, I'm spending, meet a buyer, $140. But that's my insurance. I was like, okay, thank the Lord. $140, I can sleep for 51 days knowing that the worst case scenario is 50. Okay, so On the other side of the argument is the seller of said put, and they're on the hook for 51 days. At any point in time, I can wake up and tell them, you know what, exercise my right, send my shares away. And by the way, price does not have to be below, but I would be a dummy if I did that with the price above, okay? So what happens if I exercise my right? Then my shares will disappear out of my account at $50. They will appear in their account for $50. And this position will just disappear off the board. The $140 I spent goes away and the transaction is done. So me buying the put, that's what it means. The put in this case was used as insurance. For the other person, why would they sell the put? Well, let me word it to you. So, gosh, if somebody, the other side of the argument, they're thinking to themselves, man, I want to buy Twitter, but I just wish I could buy it at 50. That's what they do. They wished they wanted to buy it at 50. So they go and they sell the $50 put. That they got paid today for the opportunity to buy it where they wish they want to buy it. So worst case for them is they get long at 50 like they wanted and they pocketed $1.40 for it. So their break-even point is below 50, $1.40. So how good is that for selling a put as opposed to buying the shares right now? So they win, I win. It's a symbiotic relationship. That's where there's a market. There's a buyer of the put, me wanting insurance. There's a seller of the put, them wanting to get into the stock. I pay a little bit for peace of mind. They collect a little bit for a great entry point. Perfect scenario.
Yeah, that makes absolute sense here. And we're getting a lot of questions here in the chat room. So I'm just going to take a minute here, Nick, to show them the chat. I'll just share the screen here really quick. 1 second, guys. This is basically where we are all day pretty much, right? So if you can see the chat room there, throw a 1 in the chat. So here we have the chat room with Nick. Let me go to the most recent message there. Okay. Can you see that, Nick?
I can see it, but if you want me to make it bigger, mine is blown out. So I have it in its own window. If you want to give me back the helm, I can share my screen for that, unless you have something else to show.
Yeah, you can look at the chat room right now, right? You can see
that?
I
can see it. Yeah.
Okay, so basically, guys, you can see here that everybody here is interacting with Nick, interacting with all of the picks, the trades, the strategies. You can @ Nick. We're also rolling in a couple of new upgrades within this coming month. You're going to have set tools that we're going to code here in the same options inner circle chat room. You're also going to be getting 5 to 7 trades per month by Nick emailed to you. And you can always come back to the chat room here and basically go over it with Nick. So
actually, let me correct you on that one.
What happened?
Nothing. How many trades a month? I share like 3 or 4 or 5 a week.
Yeah, outside of the chat room. So yeah, you get picks in the chat room. Okay,
Yes.
you get picks in the chat room.
Yes.
You'll get several of those, but you're also going to get separately Nick's trades sent by email. So you're going to get 2 batches of trades from Nick, and you can always come here to the chat room, ask about any tickers that you have or questions. He'll draw the lines for you, tell you the levels that you need to look at. And more specifically, if you do have a strategy, tighten that strategy, right? So everybody here gets their questions answered. No trader is left behind. We also have emails here as well. Not emails, but we have like videos. So Nick will post the sessions in the chat room, which these are the Sunday sessions. But this is pretty typical, right? You know, if you ask a question about a trade, you pretty much will get more than just a yes or no. You're going to get all this stuff included. So there is a 7-day money back guarantee on this. If you guys want to try it, I'll leave the link. But let's get back to the education, Nick. I just wanted, just so we can get these questions out of the way, and we can go ahead moving forward with the education, Nick.
Okay.
Yep, take over there.
Yep, I am. Yep. Okay, are we up there? I think we are. So we Lena, we'll get to that in a little bit. So the concept of a put is not bearish. It serves a purpose, depends on what you're doing with it. So let me demystify the fact that options are more risky than stocks. So let's consider Twitter. Okay, so it fell, whatever it fell, 10% in one day. If I had bought the shares yesterday, I'm down 10%. If I had sold the 5250 put, I haven't lost a thing yet. On paper, my position is red, but my goal is to buy the shares at 5250. So if they give me the shares at 5250, I don't start losing until like 50 or lower. These are round numbers. I don't know what it was yesterday. So let me walk you through a scenario on that. I'll switch to Apple. Actually, I'll switch to Visa because I know it's struggling. So here's Visa December contract. Let's say you wanted to buy the Visa dip. Huge dip. You want to catch the falling knife, and man, that looks like an inverse cup and handle that could bring you to 196. Yes, technically this could happen. In fact, if this fails, and it did fail today, depends on what happens tomorrow. It has support at 210, but this has 195 to 193 written all over it with support in two spots in between. Let's say, hey, you know what? I'm good with that. I like the trend. I want to catch the falling knife. So you go out and buy 100 shares at $216 a share. So that's the out-of-pocket expense right here, right now. There is no buffer. The stock falls tomorrow, you start losing money, okay? So that's one scenario. Somebody goes out and buys shares. We're comparing doing it through options versus buying shares to dispel the myth of options are more dangerous. So you buy the shares at 100 of those. So I say, you know what? I would love to catch the falling knife, but I'm going to use options. I want to leave room for that Nick fella said that technically it could be a debacle here. It does have support, but there's a chance that, hey, if the markets fall, it's going to 192. I guarantee you that. So I sell the put. You're long, I'm long. How am I long? This is a bullish position because I'm saying I need the stock price to not fall through that price. So it is in essence bullish, but has a lot of room for error. So for example, let me show you the room for error. What did I say, 195? So the stock can fall another 10% and it would still be above the level of my risk. So what I did, if I sold that put today, I promised somebody out there that I will buy their shares at 195. So you bought your shares today. I said I will buy mine at 195. My break-even point is 193, and I'll show you why in a bit. So the scenario happens, the worst case scenario comes, Visa falls to 195. You're down already 10% of your money because you bought it today. I'm not down anything yet. On paper, my sold put, this one, shows a lot of losses. It'll be like down 500%. Maybe more, maybe less. But I don't care because my intention was to own it at 195. So if I ignore all the losses, I will wake up one day with 100 shares of Visa at 195. So if the stock price is at 192, I broke even. 193, I broke even. Why? Because I collected $2 to do that. So that gives me wiggle room. So not only do I have this much wiggle room, I have $2 more. So let's say it falls to 193. You lost 10% and then some. I didn't start losing yet. So how is this riskier than buying shares? It's absolutely not. What's risky is when I start buying stuff willy-nilly and then time expires on them. And I can quickly lose my money without having to, without knowing where the heck it went. You'll be like, what happened to my account? Well, that's because you've been buying left and right. So.
And that was actually one of the mistakes I made when I was starting out trading options, because, you know, like you remember when I started trading options, Nick,
Yep.
And I was basically just doing calls and puts, and I really wasn't doing really your strategy, the credit put spread, which has really kind of changed how it works.
So yeah, I do worry about the delta. Bill is speaking the truth. I'll get to that, Bill. So here's the thing. Buying is okay. It's statistically wrong. I'll tell you why. If you've taken any options class before, I bet you in the first paragraph, somebody asked about books. I haven't read any books, so I can't recommend any. I did all of this on my own. I'm an engineer, figured this stuff out on my own. So if you take a class on options, I bet you in the first paragraph or the first 5 minutes of the presentation, there'll be a statement like, most options expire worthless. So this is where you close your books, you shut down, you say, okay, where's the room in the class where they say how to sell options? So you better be teaching me on how to sell options. And that's what I like to do. Whenever you sell something, you collect the credit. That's where the terminology comes from. Credit put spread, credit call spread. Selling a put is a credit into my account. No money leaves my account when I open a credit spread. I collect money. So if I do it correctly behind safety, then it is a statistically viable where I have an advantage. So you know what? We didn't start with the definition of risk. All right, so let's back into it. This is, watch this. So I'm going to, okay. I'll use this. That's Ford, by the way, monthly chart. So the definition of risk, if I ask you now to teach me what risk means, I bet you won't give me the answer I'm looking for. So I'm going to save you the trouble, and I'm going to tell you what it is. All right. Well, the opportunity, yeah, I get that. So there's the carrot out there, whatever the reward is. But risk itself, especially in the options terms, it's so important to say it the way I say it. Number one element of risk is size. So what is at stake? What's my consequence if I'm wrong? How much can I lose? Right. That's the amount. That's the biggest part, right? But then once I decide, okay, 1,000 or 10,000 or 500, whatever the number is, I put that aside. I made the decision. There's no managing that. I decided on it. If I wanted to jump over a bar, okay, I decide, I commit to it, knowing that the most like happen is I can twist my arm or something. So I accept the terms. Now, the second part of risk is in options where to place the trade, which means what are my odds, right? So if you don't think about your odds before taking a trade, you're guessing. I mean, this is the most important part. Why? Because when I take a trade, I want to know that the odds are in my favor. I'd never want to take a trade that's 50-50. So 50-50, when you buy a stock, you're 50-50. You can do homework to increase your odds by knowing something other people don't. Most other people don't. You give yourself edge. Well, with options, I can give myself all the edge I want, and every day I get a mathematical representation of that number. Somebody earlier here asked me, I forgot your name, sorry. Bill asked me, do you worry about the delta? Bill, that's all I worry about is the delta, because that is my odds. So let's go back to the options education. I haven't talked about calls. Let's concentrate about puts because it's the same. I said I sell this 195 put. Why did I choose that? Because that would be the one I would sell for me, given my personality. Why? Because I found it on the chart. I showed it to you. There was a level where it bounced. And it gives me the low delta. This column here is called the delta. So options have Greeks that everybody wants to talk, and forget about that. And let me explain them to you in plain, simple English. First of all, theta. Oh, the theta this and theta that. Theta is just a representation of time. Know that when you buy something, time is your enemy. Okay, so you want something to happen right here, right now, when you're buying something. When I sell something, it's the exact opposite. Time is my friend, and I want nothing to happen. When I sell a put, if nothing happens, I win. If the stock falls, I win. If the stock falls a lot, maybe I lose. If the stock rallies, I win. If the stock doesn't rally, I win. Only one scenario would make me lose money: a crash, complete crash. So that's a good risk reward, in my opinion. I have the edge. In fact, this 0.15 tells me that I have about an 85% chance of success because look down here. What are the odds that Visa is going to be at 180 in 51 days? Very low, according to this market maker. The odds makers, they give it like a 5, 6, 7, 8% chance. The further away from current price you go, the less likely this price is going to happen. Currently, you got a 50-50 shot. Look, 0.5, 0.45. That's a coin flip. If I go here, 0.5, coin flip. So I have no edge. Here, I have a lot of edge. Here, no edge. So I have edge if I'm selling. If I'm a buyer, I need a lot of things to go wrong in Visa from here for it to come to fruition. So when I'm selling options, I want to sell low probability ones. I want low deltas when I'm selling options. When I'm buying hope options, when I'm buying and I need a move in my direction, I want a higher delta. Okay, so there's a good balance there. So we just learned two Greeks. Theta is time. Time is your enemy if you buy. If you're selling, time is your friend. And second, which is the most important one, delta, because in the definition of risk, this is the guy I check on. That is the part I manage. When I say I'm managing my risk, when I take my trade, when I launch my trade, I go with a certain percentage. And in this case, in that example, I said 85%. That's my odds of success. If price goes against me and this drops to 70, so maybe 70 is my pain. You know what? I don't have enough edge. I should get out. That's the part I'm managing. Not this. This I set and I forget it. Okay, so this is where I manage my risk, the delta. If I sold the put to take the trade, if that number grows, I'm losing money on paper. If that number drops, I'm making money. You're jumping the gun on implied volatility. I'll get to that, Ryan. So
yeah, and
this is the odds maker.
You do this for every trade that you put out in
every
the chat
trade,
room.
Every trade that I post in the chat room has a video with it. Well, every significant trade has a video with it, probably 10 to 15 to 18 minutes long. I review everything I just said here. I'll word it the same way as I did here. I usually say, here's the opportunity. First of all, here's what the word looks like. Here's what this stock looks like. Here's what the fundamentals are. And here's why it's falling. And here's why I'm catching it. And here's my thesis and what would get me out. And then here are the ways to trade it. You can buy shares. I share that idea. You can buy calls. I share that idea. You can call spread. I share that idea. You can sell a put. I share that. And a put spread. And I share that. So it's a complete A to Z. Each one of those trades can be a lesson in options all by itself.
It is.
If you think 1,200, whatever it is too much, would you like to have 4 or 5 videotape lessons every week for a year? That's what you're getting. So, and then on top of it, you can come to me and say, hey, you posted that trade here. What do you think happened now? What would you do if you were me? And I will tell you what I would do. You know, everybody's up to their own thing. I book profits early. I book losses whenever I see levels breaking down. So every person is different. There's no, hey, get in now, get out here. I can tell you technically what should happen, but you have a different portfolio than me. So I can't say get in and get out. It's irresponsible for me to say that. I can say, here's the opportunity. It's here right now. I may take it. I may not take it. Depends on my portfolio.
Yeah. And just want to make a quick comment here. So for a couple of guys here that are saying this is for intermediate. So everybody that joins the chat room with Nick, we have member only educational videos that goes over the first things like what is a call, what is a put, what is a covered call, what is a credit put spread, basically all these questions. What's the best time to apply this type of trade? How to trade around earnings? Nick always, on top of giving you guys picks, Nick is constantly sending us educational videos for our video library where we have all of that for the chat members. So you guys basically have those. And that's how I learned a lot of things with options, to be honest. Like I learned it from watching those videos, pen and paper. So if you guys, feel like this might be too advanced, I promise you it's not, because I went through that same process and all I did was follow Nick, his videos. And yes, there is a 7-day money back guarantee for the guys that were asking that. So don't feel overwhelmed. We all started there, one day. But with the right mentor, with the education, the right community, it's really not going to feel that hard.
So is it 2 weeks, 10 days, the cancellation period that you usually have?
7 days. It's 7 days. Yeah, 7 days money back guarantee. I put my info there in case you guys want to email, but this is what we do in the chat room. We do this every day.
So yeah, the really, I promise you, the value is there. And the style of trading doesn't as much matter because I answer, Nick's my favorite. I like it too. The style doesn't matter because trading is all about making the right decision at the right time. How you implement your decision differs. And we have people, I have people in there that are futures traders. I have people that are strictly equity traders. I have people that are a blend of everything. I like credit spreads because I literally need nothing to happen to win. So versus if I buy shares in a stock or if I buy calls in a stock, I need something to happen, and that's the only way I can win. Whereas when I sell something, I need absolutely nothing to happen. I also share iron condors. I forgot to mention that. So every week on Friday, I post a set of 8 to 10 iron condors. If you don't know what that is, I'll show you in a little bit. But it's basically 2 credit spreads for a ticker for a short period of time, most likely. And where if this stock or ticker stays within a range, you win on both ends. They're tricky, but they work 90% of the time. Last week, they gave the people a hard time on the upper end because the markets blew up. Yeah? And this week, so far, so good. Everything's still in line. So let's get back to teaching. I saw a lot of ones in the beginning, so we have a lot of beginners here. So I don't want to start throwing things to scare people away. I promise you, I address every question like from zero. In the chat room, you can DM me, by the way. They're not supposed to be here. I mean, it's off hours, but they're still in here. So if, like I posted here somewhere, if I ever miss a question, please hit me a direct message. It's easy for me to miss a question. She missed the question. By the way, I wish she was in here. She had an issue and she wanted a trial, whatever, and then I posted something that yielded immediate results for her, and that convinced her right away to stay through the trial period. And that happened recently, not too long ago. Somebody is looking for Twilio after hours, so we'll discuss that tomorrow. No sense of doing it right now. So you can DM me, and I promise you, I will address the question, any which I may even do a video to answer your question. So tell me, what's the value for something like that? Moving on, getting back to options. So we talked about puts. We talked about the fact that they have a time limit, their contracts, time limits. They have set prices. I chose the 195. I could have chosen an aggressive one and collected $4, but then now my commitment is at 205, not 195. Personally, I'd like to give up a little bit of potential reward for a higher edge. I want edge. When you go to a casino, the market maker, the casino, the house has the edge on you. This, I'm being the house. So I'm giving myself better edge than my opponent. My opponent, if I sell this, I have an opponent on the other side who's buying it, trying to make money. I'm selling it, they're buying it. I give myself an edge because they are buying hope. Only 15% odds-ish. I have 85% odds. I chose it, okay? All right, so this is the concept of time on the clock, level, odds. What are my odds of success or failure? Let's see what else I can tell you. Oh, now somebody mentioned implied volatility. This is jumping around, but I'll mention it now. So these are the columns that I have here. I don't have bid and ask because I deal with big names that are usually liquid, and that it's not an issue. I have mark, which is the actual price of that option, which is the middle between bid and ask. Sometimes it's called something else, the mid. I have delta. Most certainly I have delta. If you ask me to keep only one of those, that's probably the one I'll keep. And then I have volume and open interest. Let me make the difference between these two. So open interest is whatever positions we had at the open today. So this is a static number. It won't move during the day. So this is what happened today. So when we opened, these were all zeros, and these were that. And then throughout the day, these are increasing, and these did not change. Tomorrow morning, These will change to reflect whatever happened today, and these will restart from zero. So volume is whatever's going on today. Open interest is whatever is as of last night's close, this morning's open. Okay, so that leaves us with this one, implied volatility. So you know the word volatility, right? So it's like the VIX, it's the scary fear factor. This is the VIX for this particular stock, for this particular period. So give me a stock that's reporting earnings tonight. Twilio. Okay, perfect. So let's go to Twilio. I'll show you what implied volatility is. Ford too, okay. So here's Twilio. The implied volatility is 120%. That's pretty high. So what is it usually? Let's go see. This is this week, okay? Look, 2 days on the clock. Let me go to December. December is 45. So why is this one so blown up? In fact, this one shows you, look, this is the usual implied volatility, the dashed line down below. This is what it is this week. Why? Because of earnings. Tomorrow morning, this number right here will go, will go down to like 60. So if you bought something this week, if you went out and bought a call or a put for this week's expiration, you overpaid. By how much? More than double, maybe triple. So tomorrow morning, even if you guessed correctly, you're going to lose more than half your money just from that crash in implied volatility. So it's not a good idea to buy options for the week expiring. You can accomplish the same thing by buying them a week or two out. Look, the further out, the more normal it becomes. So the smart feller, or person, I should say, would buy here and sell here. But that's a different conversation. If you've heard of call calendars and diagonals, awesome way to make money on earnings, because I'm selling something that's 3 times the price it should be, and I'm buying something that's regular price. So the next morning, this one's going to get shellacked in my favor, and this one's going to be buddy shape. So, but that's a different conversation. We talk about that in the chat room. So implied volatility simply means how nervous the market is about this particular contract for 2 days only. Next week's, it's not like that. It's lower, half. The week after that, it's not like that. It's lower still. So we went to December, it was much lower too. So boring, hot. You don't want to buy hot. That's just too expensive. As soon as the event goes away, which is tomorrow morning, the event happened tonight, the stock is falling 13%. So even those who bought puts tomorrow, they will experience a loss from that. They won't lose money maybe, but they will lose a lot to that. So, okay, so this is Ford. Let's see if we can say the same things about Ford. They also reported after hours. They're up 10%. Good job, Ford.
I actually wanted to put in a quick word here about Ford since we're already on it. So what they reported for their earnings. Their EPS was up 88%. Revenue was up 1.4 billion year over year, and they raised the guidance. And it made me ask myself, if you want to talk about this as well, what about the chip shortage? Wasn't there a chip shortage?
Yeah. So should we buy puts in Ford now? No, but it would be better than buying calls on the open. I can tell you that. So Ford, we're jumping around. We're off of options here, but that's what you guys want to talk about. We'll talk about. So here is a 1-year chart for Ford. Currently, it's right here, that blue line after hours. It's right here. So how can I make a decision whether to buy it or here if I don't change the time frame on this chart? What did I say? First thing, what do I do on a chart? What's my first tool? Anybody paying attention? Eyeballs. I look left. Okay, jump up. I look left. There's nothing to see. So I need to expand my horizon. That's a weekly chart. Guess what? There's still nothing to see. What? 5 years and I still can't see? Monthly chart. Now we're going back to 1999 for me to be able to see what to do with Ford. I wouldn't touch it here. Going into 18, it is not an obvious entry point. It is to chase it above 18, 18.2, and last ditch effort at 19.1, 19. And if it breaks through those, expect 26. Did you hear the point? I wouldn't buy it going into 18. I would buy it above 18. Okay, back to options. We talked about the puts. Let's talk about the calls. I wouldn't buy anything for it, Bill, on the open. Okay, so we'll do tickers in the end. So let's finish the options lesson. So we talked about the puts. We talked about the fact that they have a time limit, that they have a level, and implied volatility we just learned. I'm going to go back to something familiar. I think that was Twitter, just so we'd be consistent with our message. No, Visa. We used Visa. Okay. So we're back to whatever we were looking at. Implied volatility very low. It's a boring stock. So statistically speaking, something would have to go seriously wrong with the market and with Visa for me to lose money on selling this put. Okay. So the delta is the odds maker. It changes based on price, based on the implied volatility and the expectations of the market. So, but it's a good gauge for me. So I don't have to guess, hey, what are my odds? I can read it every day, every minute. It changes every minute. Price moves up, my delta drops in my favor if I sold it, against me if I bought it. Okay, so what are calls? We know that puts are like insurance. The buyer gets insurance, the seller commits to buying the shares, therefore providing the insurance. So what about the calls? Okay, so let's say I wanted to buy Visa, but I'm afraid to risk $220 times 100 shares worth of dollars right now. That would be the expense to buy 100 shares. So what if I can lock my price at 220 with just a fraction of that amount? So if I buy a call, just one call. And by the way, when somebody says I bought a naked call, that's what they mean. They bought one call. They didn't buy a spread or anything. This will cost just under $600. So $575 goes out of my account. And what do I get in return? I am locked in at 220 for 51 days. At any point in time, I can call my broker and say, exercise my right. So they have to give me shares at 220. And what do money goes out of my account once I deploy my exercise, and I pay 220, and this one just disappears. I lose my $600, which means I needed to move more than $6 for me to start making money. I needed to get to here to be green, but at least I'm long with a small amount of money. Now, this is the risky part. If it goes the wrong way, I can lose my money pretty darn quick. So if somebody bought these yesterday, they lost 60% of their money today. Okay, that's a huge drop, 6 or 7% on a boring stock. That's why it's dangerous options, because they bought the calls based on what? Why did they buy the calls? They had no edge if they bought the calls at the money. They just bought the calls because they felt like it. So that's where it gets dangerous. They didn't have a set reason, and they could have moderated their risk a little bit. How they can moderate the risk is by doing it as a spread. So here, we're jumping in now in the deep end, folks. So if I bought a call, it would have cost me $600. If I bought a call and then I sold one above it, now it becomes a spread. I literally spread my risk. So I'm long at 220. I get out of being long at 230. So now my price drops from 600 to 300. Look, because I'm paying $575 and I'm collecting $270. The difference is my out-of-pocket expense. What's the maximum I could make? Now I limited my upside potential to only $700. Now I say only jokingly, because what's wrong with more than doubling your money? Yeah, nothing. There's no shame in doing that. And on bad days, this one loses more moderately. You don't get 60% drop. The absolute value out of your pocket loss is much smaller, and you're likely to be able to sit through a bad day or two, versus this one, punch to the gut, right? And it's hard to recover from a 60% drop. So this is a less violent way, less aggressive way, less fast, slower way of taking a risk. You win slowly and you lose slower. That's one way. Okay, so that's a visual representation of the call. The call reserves the right to the buyer to own shares at X price. Okay, they don't have to. They may choose to. Let's say I bought the call for $5.75, and then Visa rallies $10. So this $5.75 will increase in value. It will be $11. I don't know, 11, 14, depends on how Visa goes. Then I can just simply sell the call. I don't even have to buy shares. I sell the call. So if I sell it for more than what I paid for it, I made money. If I sold it for less than what I paid for it, I made money. So what kind of money I can make? One call is $575. So if it goes to $1,100, that means I made $600, $500-ish rounding. So it's good money, but I can lose it just as fast. So I better be what? Purposeful. No, I have an acronym in the chat room. If you join me, when you join me, you're going to be bored of it. But I tell you what, it will save you out of so much heartache. NTNT, no trigger, no trade. And sometimes the trigger is not just on the chart. It's no thesis, no trade. It's still a letter T, NTNT. So if you come to me and saying, Nick, how do I save this trade? My first question to you is, why did you take the trade? And I'm not being combative with that. I just want to literally know your reason. Because if you don't have one, or if that reason is gone, then you don't need to ask me. You should be out of the trade. So
yeah,
every
absolutely.
trade to take going forward, write this down, NTNT. Do not ever take a trade without a specific reason of taking the trade. Because I use the stupid example of talking to my mom. She's almost 90. Hey, Mom, I need to get you, give me some money so I can get you into a trade. I have to have a good reason for it. And if I can't recommend it to my mom, I have no business taking it for myself. So this is an easy, stupid way to limit myself from doing silly stuff. We forget, by the way, if you're in a chat room setting, you're less likely to make mistakes because we forgive ourselves much easier than when somebody's watching. So I have a lot of people who tell me in the chat room what they're trading. Just bought this, just bought that, just got out of this, booked my profit, booked my loss. When you start posting your own trades in there, and it's optional, you don't have to, you start becoming more accountable. You start becoming a more responsible trader. You would stop taking willy-nilly trades. So be purposeful, have a specific reason to get into a trade.
And that's all part of the education. So we're getting a lot of questions here about the chat room, guys, but here's the thing. We've spent over 1 hour going over the basics of options here, calls, puts, what does it mean? And we have way more detailed educational videos in the chat member resource library, where we have all of the videos that Nick has already pre-recorded for you guys. So we're going to move into a little bit more of a interactive part here. So basically, Nick, I mean, you remember when I started trading, well, not when I started, but pretty much when I started following your guidance on credit put spreads and all that stuff. I would say the first thing that really made a difference was applying the discipline, being in the chat room there at 7 a.m. when you post the daily game plan and the sessions on the weekends. That's really what makes it well, because a lot of people that have 9-to-5 jobs and they can't, or they just can't be in the chat room all day, they go to those sessions on Sunday where you adjust the portfolio, you break down the news, you pretty much give them the full rundown week to week, if for any reason they can't be in the chat room all day. So I'd say that's a huge plus. Even if if anybody here has a 9-to-5 or a part-time or whatever it is, that definitely is made for you. But keep in mind that if you do want to be successful here with options, you do have to basically take it seriously, right? Like a career. So and part of that is actually having a whole community, all that stuff where you all trade together and all that. But let's talk about some of the trades you made from the chat room, Nick.
Sure. There's a not so nice person in there. Nobody's trying to finagle anybody out of anything. They're all grown-ups here, so you can join the fun too. All right, so let me see here. Just today, TXN, let me see here, it was having a bit of a tizzy on, I believe, a headline. So this was supposed to be a boring company, a boring report, and then the reaction was slightly aggressive. So the management did not give it a good chance. because they delivered tepid tepid results, and they didn't wow anybody with the forward guidance. So it wasn't like that the report was terrible, but I saw an opportunity. It's falling into support. So technically speaking, I would catch the falling knife with kid gloves using options. If I wanted to sell a put spread or sell a put to own the shares, that would be a good way to do it. So I shared a complete video about that. The volume profile says it should have held somewhere around 188, 189. It may still do that tomorrow if it pops, depends on the market. And then if the stop for me would be if it loses 182, I would probably want to get out and try again lower, because technically it may open the door to like 176-ish in the right setting. So technically it is a catchable knife, but not all in, just in case. And I also offered a table, and let me show you, other than the video, I think it was 12 minutes long. So let me bring you a picture. Whoops, sorry about that. That wasn't it. One moment. There it is. Okay. So the idea is to not just say this is the only way to do things. So I realize that I like credit spreads, but not everybody does. So this is the table that I usually share in the video. So it's the same ticker. The price I did the video was 185. It was like almost 190 or 189 a few minutes later. So the entry prices, those were the premiums that I either collected or that I paid for. So let me walk you through it. So 4 ways of getting long a stock. One is to buy, well, other than buying shares. One is to buy a call naked for, in this case, December, 12/17, December. And the level I chose was 185, because in my video, I said, I don't want to be too far from current price because I don't want to guess in which direction. So then by the time the markets closed, it was 673. So immediate profits right there. So what does that mean? If somebody paid $540 to buy that call, they have $233 right away. So they could have closed it. So that's a pretty, I'm doing air math here, whatever. Anyway, forget the air math. It's a long day. So a debit call spread would have been a $10 wide spread opportunity that cost less, $360 at the time of open. At the time of the close of the market, it was 4.25. So there was some profit there. Clearly, it profits slower, like I just said. This one profits faster, but guess what? If the stock went down to 180, then it would have been much lower than this. So it depends on your personal preference. See, faster call setup, tight stop, slower spread setup. And I usually say not for me or something, but I didn't want to sway anybody. Usually this will have not for me here. This is a credit put spread, and this is a sold put. So these two involve no money out of pocket. In fact, I collect some money for it. So in this case, I said, if I sold the 165 put in Texas Instruments, 165 down here. So the worst case scenario of that trade you just saw is I get long 165. I own the shares of 165 and I break even $1.50 or $1.40 lower. So that's the worst case scenario for this trade. That is my jam. That's the kind of risk I take all day, every day. It's a calculated risk. I know the company. We looked at the fundamentals. It's nothing too exciting, but hey, I don't need a rally. I don't need, in fact, it can fall from wherever it is here to 10 or 15% more before I really get in trouble owning shares. That's a good scenario for me. So it's not foolproof. Nothing is. We could crash, and I mean crash. You know, I don't know how long you've been trading. We've had 20% dips in one day, so I remember those. This is a kind of trade that I would take at all-time high markets. It is so important to find things like this that had just shed 5-10%, falling into support, selling risk below it to keep more buffer, to add more buffer to what has already happened. And technically, this is another solid support level if this one fails, and this one is another support level. So I really protected myself here. And let's look at it on the in the options TXN, in the options chain. So December 165, it's this guy. right there. So based on the market makers, whoever makes all markets, they're selling stuff. The expected move up or down for these 51 days is about 10 to 11 bucks, up or down. So it could rise to 196 or fall to 174, and it would be the range they're expecting. I went way below that. That's why my odds, look at how low my delta is for selling the 165. That the buyer of this put from me is employing a lot of hope. They need so much wrong to go with this stock for the next 51 days for them to actually make money off of this. Me, I'm taking the risk of buying shares at that level. I can live with that. So that is the type of trade that actually I shared this one just today. And what you can't see here is in the chat room somewhere yesterday, I posted a trade idea on the TLT. And believe it or not, I have a history with that TLT. Personally, I have a love-hate relationship with it. Look, that's somebody says, book TLT, close sold call Friday. Thanks, Nick. So this is somebody from, I don't know how much money they made there, but I can tell you this person.
That's the famous TLT trade.
Right. No, this is not. This one just came up yesterday. So in the chat room only. So if they book 2 or 3 trades like that, they made up the price of the program they're in, whatever price they're in. I guarantee you that. I see them posting all the time. So the TLT trade, bought TLT calls yesterday. That's because I shared my TLT setup yesterday. Okay, this was my setup yesterday. Perfect. Oh, perfect. So I reposted this from the day before. So this is today. I reposted to remind people what I posted yesterday. So TLT is delivering, I believe. I shared a post about it yesterday. So this was the post. I said, this is my trade. This was my actual trade. I paid, let's see here. Come on, get out of there. So I paid $1.80 to buy the 144.5 call for November. And then I sold the 148 call for this week, and I collected 22, and then it dropped to like 6 cents. And then I said, it's doing something weird. I don't know why this shows 6 and 8 cents. That's not normal. There's something going on. There could be still another leg higher. That was my post. I wrote it up, and I'd like to show you what the TLT did today. So the TLT is a representation of, quote, bonds prices. This was the TLT today. So you tell me that this was not a good post and you could not have benefited from that. So that was the immediate profits from the TLT trade today. Mine was up 4x, my setup, but it was ideal. So I don't know what EWG did, but he was pretty happy today.
Yeah. But this was a trade that you had made before, like many.
Yeah, but that was before.
Trade.
Yeah, I think we caught this rallies.
Yeah, CNBC, Bloomberg, everybody there was saying that no, the TLT is going to like drop, lower, and you were probably a loner in that trade, but it ended up working out for you.
So if you heard CNBC, the term runaway yields, that's the opposite of the TLT. I said, you guys are wrong about the runaway yields, and I'm going to take long the TLT. I forget where, probably somewhere in here, against your the runaway yields scenario. So they were saying that the yields are going to rise, the TLT is going to fall. I said, I'll take the other side of that trade because you're wrong about it. And we banked. But this was something that came up yesterday, last week, and then again yesterday, and I posted it yesterday, and I said, I think it's taking another leg higher this week, and boom, it delivered. You never see the TLT up 2%. Look back, there are not many of those, and it could revert lower tomorrow, but hey, the opportunity was here. And for your knowledge, if it goes above 152.72 to be exact, this is trigger 1, this is trigger 2, expect yields to collapse. So this TLT will get to 162 from here with a lot of resistance in the way. But these are 2 major fails. You let the bulls of the TLT take these 2 out, I think they will overshoot to here.
Yeah, and we'll follow up with this, of course, in the chat room. But look,
I'm staying long. Yeah,
we have to talk about Tesla. They got an upgrade from
Oh
Goldman
yeah.
Sachs. And here's the thing. I've been trading Tesla since the first rip that you put in the chat room, and I've just kept an eye on it with the technicals that you sent me, like the charts.
Okay.
So it was just a big winner. We got to talk
Okay.
about.
So here's the Tesla, how it unfolded in the chat room. So the breakout here, I said trigger to 790, and then it got to 790. I said catalyst to 835, and then it got to 835, and I said, whoa, Nelly, we're out. So before the earnings, I said I'm taking a debit call spread in the high nines because I think they want 1,000. So I took a debit call spread in the high eights. I'm sorry. So I think it cost 60 cents. 45 to 70 cents to be safe. Mine cost 60 cents for $10 wide. And guess what? The 60 cents turned into $10. So if I did one contract, I paid 60 cents times 100. So not a lot of money. And then that one contract turned into $1,000. One. So I know there were a ton of people in the chat room that did it. And I don't know how many contracts they did, but I would be conservative. Let's say they just did one. There's $1,000 almost right there. So what was the catalyst? Was the fact that people have it wrong. I say on Tesla, I had the discussion today with a friend. So they said, I'm shorting Tesla, it's so overvalued. I was like, okay, so curiously speaking, what do you consider value? What metric are you measuring value of Tesla with? With what metric are you measuring value? So they, I forgot what they rambled off, market cap. It's no way it's worth $1 trillion. I was like, that's not value. Brendan, I'll prove you wrong. I'll prove you wrong. So if I think you're saying what you're saying, fundamentals. So people are still trading Tesla on its fundamentals the way they think they are. Trust me when I tell you, this is not the old Tesla of 2018. This is a beast, and I'll show you. Not my opinion, facts on pieces of paper, black and white. So people who are shorting this company are playing a tennis match with a ping pong racket. First of all, 20% of the stock-ish is not going anywhere. So if you short it, you better own your own stock, or you have yourself covered there. So let me show you the fundamentals that everybody poo-poos. First of all, the one thing that sold me on it is this number right here. This is a cash flow from their operations. They used to need to borrow to exist. Remember in 2018, they almost called it dead. They had lawsuits, blah, 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 $900 million payment due. Could they borrow? Could they not borrow? Will they lend them money? Their bonds going crazy. Well, in 2 years, they went from burning cash to generating $6 billion in cash flow from their own operations. So I've run companies before. The one thing that ties your hands is needing to borrow to do your stuff. You could have a brilliant idea. You go to borrow, guess who's sitting on your board? A banker. Nope, you can't do that. But when you generate your own $6 billion, then you don't have to borrow. Then you start going after the quote other. You remember the argument for Tesla was it's not a car company, it's got all these other things. Well, now they can go out and do all these other things. You think it's a coincidence that when you go to Costco, people are hitting you up to install a wall in your house from Tesla and panels and all of that? It's not. So now they're going to go after all the other stuff. So first of all, look at this P&L. The revenues from 3 billion to 7 billion to 21 billion to 46 billion. Are you kidding me? The net income, loss, 3 billion, 3.5 billion running 12 months net income. Something changed. Nobody's looking. So yes, they have competition, but it's not a runaway freight train in valuation. 24 times sales is not outrageous. Okay, this is a reasonable price for a fast-growing company. I don't care about the PE. It doesn't come into play for a growth company. People who shorted Amazon based on its PE lost their shirts for a decade, and they couldn't figure it out. They're using the wrong metric. This is a growth company. Who cares if they're profitable? You can't build a mansion like this skimping. There's no way. So they're not squandering money. They're minting money. So this is not a shortable stock. Now, that doesn't mean you go out and buy it up here. It just means you don't short it and you buy the dips. When everybody hates it, you get on board. You say, you know what? This company is doing things right until something changes. Okay.
Yeah. And I mean, I look, Tesla is one of the companies, Nick, that I have in my long-term portfolio. So for example, this is how I structure my thing, right? So I have a long-term portfolio where I'm just buying high quality stocks that, I'm trying to own for 5 years or more. And then I have a trading setup, a trading account where all I do is trade the options. I obviously as a trading vehicle, but definite look, Tesla has been a great winner. It's been great for the chat room. When we're done with this, let's go over AMD as well, because they had an amazing quarter.
Yeah.
An amazing quarter.
So a benefit of the chat room is if you're a fast trader or simply have a problem with a trade, they hit me up. Hey, Nick, can you help me out with Tesla levels here short term? This would be if somebody asked me that tomorrow, these will be my comments. I'll pull up a chart with a lower time frame. This one is an hour. I'll go lower if they're fast traders. I'll say support, resistance 1, resistance 2, and support 1. So that's your playground. You're going to ping pong inside these lines until one fails, and then you take the leg to the next one. There's going to be buyers in here. So that's another level of support. So I'll lay it out where the lines that matter. So how does that help? So if the price is falling into support, that's not where you buy a put. This is where you buy the put to catch this little move if you're fast. That's not where you buy a put. This is where you buy a put to catch this move if you're fast. So if it comes down to here, that's where you try longs if you're fast trader. Then because then it has support, and if the support holds, you're going to get this little bounce. If it gets up to here, that's not where you buy a call. This is where you buy the call after they beat this and after they beat that. So it depends on your speed. But having these lines, it's like a second opinion to get comfortable. Let's say it falls like this and you start buying puts here. You made a mistake. Why? You didn't look left. That was the base for the whole thing. So it has tremendous support here based on this time frame. So it depends on how fast you're trading. This is a 1 hour chart. Some people trade super fast in and out. Then they need a 5-minute chart. Somebody or slowpoke like me, maybe a daily chart will matter. And for me, whenever I look at this, here's another acronym, TH. It's too high to chase and too hot to, it's too high to chase and too hot to short. So AMD, TH. It's too high to chase and too hot to short. Did they report? Hold on, I can't remember now.
They reported, yes. All right, Nick. So here's the thing. They reported revenues increased.
Oh yeah.
54% year over year,
Yeah.
12% quarter over quarter to 4.3 billion. Basically, at this point, this is the fifth quarter in a row that they grow 50% year over year revenue.
Yeah. So AMD, I love the company. I just cannot buy it up here. Okay, so it's one of those things where a company goes into open air, unless I'm actively chasing it on a fast trade, I take it off my watch list. I throw it back. I'll set my alerts. So I'll say, you know what, wake me up when it comes back down to here, because then I may be able to trade it on the long side. And better yet, if it crashes down to here, I'll get long more. So I do all this homework, and when the alerts go off, I share them with you. And I say, this is where I try to, it's going to have support at 110, 111. If we collapse, it's going to have it at 116 too. If it comes down to here, I'll load up heavy. If it comes down to here, I'll remortgage my house and the dog and the car and the son. So, anyway.
So this is something we'll be following up in the chat room.
Oh yeah, all these orange lines are future conversations. These are by the way, all these lines, they're hand drawn. I still have only one tool, the price profile up there. You bought, okay, so Robert, I'm glad you said that. Good money, right? So Robert says he bought AMD back at the beginning of COVID, made some good money. So let me show you something. Back to the options conversation. So where is COVID? I can't even see it. Okay, here. All right. This is the COVID calamity. Right. Somewhere here in the first cent down, I sold puts on AMD at $22. So I said to somebody, I'll buy your shares at $22. I'm going to show you where $22 is right here. I promised them I'll buy their shares. It was October puts. I collected $2.20 for them. Are you kidding me? So my break-even point was $20, less than $20. I would have broken even. Worst case scenario is I'm long AMD, I break even at $20. $20. Okay, it's 122 now. So if I did 10, I would have collected $2,200. Then the market popped and they turned green for me. Those $2.20 turned into like $1.50 or $1. I didn't close the position. I was comfortable. I'd own AMD. I was willing to honor my deal. I would own AMD at $20. So it popped up, and then we had the second leg lower because we shut down the whole world. So then I repeated the trade somewhere in here. I don't remember exactly where. I sold another batch of puts at $20. And guess what? It was also almost exactly $2.20. Those break even under 18. So I did it twice. And of course, that was one of the easiest wins I've ever had in my entire life. Like the worst case scenario, me being long and break even at $18 for AMD. Yes, all day. Up here, I just can't get long. I need a dip into prior support. So this is a weekly chart. It kind of like eliminates the noise. And you can visually see that it's not an obvious point of entry. Is that fair to say? It's nothing against the company. It is not an obvious point of entry. Okay, so, but wouldn't you love to know when would be a place? So if you're in the team, I have hundreds of people in there. Everybody's watch lists are in there. So everybody's coming to me with questions. So if we miss AMD, I can guarantee you there's another ticker that somebody's asking about. Today, I saw at least 3 tickers I've never looked at before. One of them was tradable. I can't remember now. I'm drawing a blank.
Can we do Neo?
Huh?
Can we do Neo for Kowiski? I think him or her has been here a couple times.
We can do Neo. So Neo is one of my favorite EVs. I saw somebody ask about Lucid. I'm not going to answer because you won't like my answer. But so Neo has a real P&L. They have incredible growth. They have the backing of the government. That's a big one right there. Not because they're going to help them do stuff, because they're not going to get after them like they did with Baba. Okay, so dips are buyable. Dips into this line is a buyable dip. If it loses this line, it could get to 27. It's another buyable dip, but it doesn't get there alone, in my opinion. Something has to break in the market to bring Neo down here, but it would be a gift. And we did that several times. I did short Neo a couple of times via call spread sold, bear call spread. You've heard of them. So we will trade Neo. I promise you. Right here, it's the middle of the range. There's nothing to do except sell a put or a put spread and see if time will help you make some money on that. There's tremendous resistance at 45, but if it breaks above it-ish, it takes off to challenge that. So much safer trade. Yeah, so let's see here. Pinterest fell on hard times. I'm pretty realistic with the opportunity there. I mean, the metrics are favorable. So somewhere in here, I had a trade. I drew this potential upside. It did first part of it, and then it spiked to high heaven, delivered the rest, and then. So now I'm tempted to reissue. By the way, this was a chart with the trade. So stop out level 1, stop out level 2, and guess what? It's going to retry longs down here. We're approaching the retrying longs down here. In fact, look at how close to the trigger pins long 1 of 2. So this was the first alert. Look, an inch away. It has not triggered yet. I'm going to move this up a little bit. It's too low. So now tomorrow, probably, if it dips in the morning, I'll get a beep, and then I'll consider. The only reason I didn't consider it today is because of this. So losing this creates an uneasy feeling. I think that they're still pricing out the debacle off of this line. So this was the visual, almost measured move target on that. But the sellers are in charge. The pops will be sold. So job 1 is stop making new lows. They should have held here. They didn't. And earnings here. So management, boy, what? Oh, okay. All right. So this was the worst thing that could happen to it. All right, now I remember. So PayPal headline, buying pins, PayPal fell. We caught the dip in PayPal, paid right away. And then I said, hey, they're buyable dip in PayPal, but know that there's another headline coming. There is one, because neither companies denied or confirmed. And they usually cannot go more than 3 days before saying yes or no. And guess what? They said, no deal. We never talked about it. And then PayPal popped and then faded. So PayPal is a catchable knife. Pinterest is a catchable knife. Hopefully management says something good here saying, hey, deal or no deal, we're still on rails, because they are growing last time I checked. Yeah, the P&L is healthy. Look at that. Nice P&L. So 14 times sales, that's pretty reasonable for a growth company. Half a billion in sales, 2.2 billion. So they go from 300 million in gross profit to 1.5, 1.7 rolling 12 months. That's pretty impressive. But the market is not giving them a credit. They're trading like they're falling out of business, going out of business. That's not true. All right. Off topic here. We went off of the options. So I'm going to take your lead. You want more charts? You want more options?
Yeah, tell Nick what you guys want. Today's you're going to get a special treat from Nick. So put in the chat what you want Nick to go over. This is special time for special people here today.
Special
all right.
people. Hey, not everybody's special in there. Where's that Steven guy? No. Let's see. Whoa. It looks like options. Okay, we'll talk options. Options. How about iron condors? Crypto. Buy Solana. Iron condors. Okay. James Chang. I knew a James Chang, but they spelled their names differently. Shiba. No way. Okay. So here is the visual of an iron condor. So the idea of an iron condor is exciting. Let me walk you through it. We already talked about a credit put spread, selling a put, buying a put below it. That is yields a credit because I'm selling more expensive than the one I'm buying. So there's if I go here, that is a 50-cent credit. Okay. So that is a bullish position. I don't need a rally to win. I just need price to stay at or above 170 to win. Okay. My break even is 169.5. That's one side. They call the bullish side of the iron condor. To make it into an iron condor, it's just a fancy term. Don't get too bogged down by it. Okay, so this is a credit call spread. I'm selling a call. Never sell a naked call. Do you hear that? Never sell a naked call. This one's okay because I'm selling one and I'm buying one. So for this, I collect a premium. All right, so it's too high. And that's too low. Okay, I'm going to have to stick with it. So this would not be an iron condor itself, but this would be a visual representation of it. So in this case, I'm collecting $1.50. I'm collecting 50 cents from this one and $1 from that one. It shouldn't be that way. It should be 50 and 50, but I don't have one that pays 50 cents up here. These are wonky. So assume that this is 50. Anyway, so in this case, I'm going to say I'm only collecting $1. For math purposes, it's an easier formula to explain. So now I have a bullish position. I have a bearish position. I need price for this to win. I need price to stay at or below 200. Okay, in the next 50 days, 51 days, 51 days, 50 days. That is an iron condor. I sell it. No money leaves my account. If I do one, $100 go into my account. It's showing 150, but I'm going to assume it's 100. So $100 goes into my account. All I need to win is for price to ping pong in between these two. So how much risk do I have on the line here? Can anybody tell me? Oh, that's why. That's a $10 wide spread. See, that's no bueno. So anyway, I don't want to confuse people. Sorry about that. I should have paid attention. This is not Visa. I was like, why is this so weird? Oops. Okay, I'll redo it. Bear with me. So you get to see it again. Credit put spread, buy one, sell one, collect about 50 cents. Add the credit call spread side, the bearish side. buy one, sell one, $1.38 too much. I want $1 total to make it a round number. That's close enough. Okay. So this is $1. That's an iron condor for 51 days on Visa. I need price to stay between 195 and 235, between this one and this one to win. What do I win? $100. What am I risking? Can anybody tell me what I'm risking? Money-wise. How wide is the spread? No, amount. How wide is the spread? $5. Up here and up here. No. Okay, so here's the deal. The spread is $5 wide, right? Nope. If the price goes to 0, I can lose a maximum of $5. Right? Correct, Tony. So if the price goes to 0, that's my maximum loss, is $5, but I collected $1. So I'm risking $4. So this trade will yield 25% if I win. That's pretty incredible. In 51 days with 85% certainty. This side. Okay, let's look at this side. This side is $5 wide, right? 235 to 240, that's $5. Let's say price goes to 1 million. Let's say price goes to 255. So now I lose on this side completely. What do I lose? $5, the width of the spread, minus what I collected, $1. So I lose 4. Okay. So how much in total could I lose? That's the trick question. Anybody brave to put a number in there? 300. No. No. Oh, okay. Oh, you guys are talking in dollars. I'm sorry. Yeah. It's still $4, 400, because I can't lose on both ends. It's either side. So I collect $1 and I can only lose $4 regardless. If it goes to 0, if it goes to 1 million, it's $4 because I can't lose on both ends. The price is not going to split and run up and down at the same time. So it either goes and blows out this one or goes down and blows out that one. Either case, I'm collecting $1 and I'm risking 4. That's why people love these things, because they're hedged. Every day, you're, thank you for the math there. So every day, price goes up, this one loses a little bit, this one wins a little bit, price goes down, this one wins a little bit, this one loses a little bit. I mean, vice versa. So this would work out in whatever they are, 85% of the times, these work out. I share them weekly. And I remember 2 weeks, maybe 3 weeks where they've blown up in the last 6 months. That's it. So if you're diligent with the risk size, yep, you're going to have losses here and there, but the odds are in your favor. This is literally what the market makers do. They sell to create markets. Like if somebody wants to buy a call spread, you're the market maker. You're selling. If you're not selling, there's no market. So the market makers, that's how they make their living, and they don't lose. So if you want to think about it, the size of the straddle, now I'm getting a little wonky with options, is the price that it's likely to happen, nothing more, nothing less. I mean, less, yes, but nothing more. The scenario with Tesla would have been disastrous because if you sold an iron condor, the top one blew out. So you went to maximum loss. The scenario with Twilio, probably if somebody took a credit put spread for this week, are probably going to be in pain tomorrow. I don't do iron condors around earnings because we don't we're at the mercy of headlines. It has a lot of flair of the gambling. That's not me. I'm a planner. I'm an engineer. You don't put up designs if you don't know the worst case scenario and the odds of this and all that. I don't know what's going on. There's a variable I don't know, which is sentiment. The reaction on earnings is more about sentiment, not facts. Let me prove it to you. Okay, that's another lesson. This one is free. This one's on me. So you're saying that I hear it all the time. Hey, Nick, I'm in trouble with this call. I bought it for the earnings. Why did you buy it for the earnings? I thought they were going to put up good numbers. That is a mistake. You are 100% incorrect to take a trade for the earnings, not for the future appreciation of the stock. If you're taking the trade for 6 months out, I get it, because the earnings do matter fundamentally. But for the next day, if you're taking the trade as a trade for the earnings based on what you think they're going to deliver in numbers, you're making a mistake, because it is a coin flip the next day. I just gave you statistics on a stock that, who was it? They beat estimates. They crushed last year's numbers, and the stock still fell 10%. So where's the logic in that? There's no logic. So you can't do that. The earnings reaction is a coin flip every time. And it's fact. I'll tell you, here's another fact, simple way of showing you the fact. So I cannot remember the last time Apple delivered a shitty report. Are we agreeing on this one? Does anybody remember a bad report from Apple in the last, I don't know, 4 years, 5 years, 3 years, 1 year, 2 years? Why isn't every earnings reaction up? If it's about reports, every reaction should be up, and it's not. It's a coin flip. Look at them. Let's see, down, down, up, then down, up, up. There's a coin flip right there. So would you like to learn more? Yes, they would. Awesome. I like iron condors because they are, and they don't have to be weeklies. I used to call them ICBMs, you know, intercontinental ballistic missiles. I grew up in Beirut, so war is in my blood. So if I have visibility, if I think that the stock market is not going to go up or down more than 30%, I can throw a 6 months away iron condor that delivers 25% yield on that scenario. So all I have to do is set the trade and go on vacation. And then 6 months later, if I'm right, I make 25%. Those are sweet deals. So patience for somebody who's not looking for immediate daily, weekly reward, it's the same thing. Wells Fargo, you know, the black sheep of the banks. I won't touch banks up here. I think the only reason they're making money is because of the central bank policies, and they are unwinding those policies. So I think I wouldn't touch them. Here's a fact. Do you know what's the biggest element of the XLF, the financial ETF? You know which ticker is the biggest, heavier weight in there? That's the ETF where all the banks are. Nope, that's number 2. Nope. You mean BAC? That's number 3. Nope, not Goldman Sachs. Nope, definitely not Wells Fargo. Somebody answered it. James reminded me of it. Look up, read back. James. No. Anyway, it is Berkshire Hathaway. Not even a bank. It's like 11% of the XLF. I kid you not. JP Morgan is number 2. Last time I checked. Yep, that's what I said. Like, what? How did that happen? Yep, that is incredible. So, little known fact. Good company, well managed, clearly, right? Okay. So 1 second. Where is it? What concept do you want me to repeat? I'm glad. I will repeat anything you want. There. How about this? Oh, I brought it from a high-res monitor, so sorry. How about this? Boom. There we go. This is the XLF components. So we have 13% of it is Berkshire Hathaway. JP Morgan is 11.5%. Bank of America is 8%. Wells Fargo is 5%. Citigroup, Morgan Stanley, Goldman, BlackRock, Schwab. Wow. And American Express. Laddered options for income. I Diane is asking me if I generally only do credit iron condors. Well, the iron condor is by definition a credit. I think the regular name would be condor if I buy it. I never buy it. I tend to sell stuff. My ideal situation, if you were on a little bit ago and I mentioned the situation with AMD where I sold puts, that is a dream scenario. A company I love, a company I believe in its fundamental, a company that feeds its own beast, that's growing, profitable, and all of that, that falls like that precipitously into a ridiculously low level, I will sell puts into that all day. That is my ideal scenario. It's heaven. But those are few and far betweens. So on dips, regular dips, like the one I shared with Texas Instruments, the dip in PayPal, the dip in Pinterest, I will evaluate. I will see if I get visibility on where the scenario lives. I will sell a put spread to try to create income without having to spend any money, without needing the market to rally. So by definition, most of my bets have an 85% chance of success. And it plays out that way. So the results, more than 80 to 85 to 90 to 95% of the times of all the trades I share offer a 10 to 20% profit immediately almost, or within the first couple of weeks. Now, where people get out, that's on them. So I'm a guy that books profits early. When I sell a put spread, I don't try to milk it all the way. When I sell a credit call spread, I don't try to milk it all the way. Have I been assigned puts? Sell a call, covered call. Wait, that question is confusing. Daniel, are you asking about covered calls or puts? Have I ever been assigned? Yes, absolutely. So let me share with you a story about assignment of somebody in the chat room a long time ago, though. So here's the story. Boeing. So I'm a fan of Boeing. I made a ton of money for the group in Boeing during the debacle, out of the debacle. So got long in Boeing under $90. Okay. So here's the thing. Somebody sold a put. I can't remember the number, here somewhere or here. So no, here most likely. So they sold the put, and on Friday, the stock closed at or just below their price. So they woke up on Monday owning shares. They got, quote, put the stock. They got exercised because they said we would buy the shares. They collected a premium for it. Monday, when they already owned shares, the stock opened up 11% because they had the max headline hit over the weekend. So that person woke up with an immediate 11% win on their hands because they owned the shares from Friday. The person who exercised them, the put, thought they were doing something smart. Turns out that they lost money because they bought the put in the first place. Then they gave away their shares at a discount. And on Monday, had they not done that, they would have had an 11% pop on their hands. So the person got assigned and made immediate money. Sometimes it goes the other way, but it's not the end of the world. Sometimes it is because of market size, account size. You get a margin call, but it's easily fixed by calling the broker and saying, hey, get me out of the stock. Margin calls done. Now, somebody earlier asked about covered calls. Why don't we go there?
Hey,
Okay?
Nick, really quick, hold up. I just have to give something really quick for two of our new family members here at Benzinga. For Rav, one of the new members there, and for the other new member here, we have Rav and Will. So shout out to the new members of the options trading chat room here. Let's go. Let's go, guys.
Pew, 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 pew. So Carlos is asking, what percentage do I shoot for? There's no one answer. Depends on levels and everything. But if I take a credit put spread or a credit call spread and immediately get a move in my favor and I get 30% or 20 or 40% of the maximum gains in a fast period of time, and I still have a lot of time on that contract, I get out. I take it. Okay. Oh, I've been answering why does it I say everyone, why does it change my default to somebody else? I just answered you in typing and you didn't see it, but I just said it anyway. Carlos, thank you. So somebody mentioned covered calls. How do I trade market news? I don't trade news. That's the secret. Turn off the news. It makes you make mistakes. Okay, I'll give you a secret. 99.999% of headlines don't matter. Okay, they cause whatever is going on to be accelerated or exaggerated. For example, headline comes out, you see big red ticks, you say, what do you mean it doesn't matter? Look, they're big fat red ticks or big green ticks. Well, those would have happened anyway. They just expedited in that direction. Only a few headlines mattered in the last 4 or 5 years, very few. The Fed changing policy matters because it changes the amount of money flowing. The tax cuts for corporates mattered because it literally changed their bottom line 7 points. By the way, Biden backed out of that. So nobody's talking about that corporations are not going to lose those 7 points that Trump put in. So that's good news. Nobody's talking about that. I haven't watched CNBC in over a year, so you can tell me if they're talking about that. A headline on a company like Peloton, if they were banned from selling their product because it killed somebody, sadly, that would have changed. That headline would have mattered, okay? But a headline that says the CFO left and the stock tumbles, pounce. That's a bullshit reason to fall, okay? The PayPal dropped because they went. Remember CRM? How hard did it fall because they decided to buy Slack? Yeah, they couldn't find a break. It was falling out of control from here to October. Yeah, it wouldn't stop falling. I don't know exactly where, maybe here. No, that's the pandemic. Somewhere along the line, there was a huge dip in CRM. It was going to zero. Nobody wanted to touch it. And then new highs. So the headlines don't matter much. CEO resigned in Twilio. Is that why it's dropping? Okay, so this headline, borderline, maybe yes, maybe no. You know why? Because if this was AMD, that's a major news because she is the reason why the company is like this. It was in shambles before she came on board. So I don't know the effect of this particular CEO to this particular company. So thanks for the news there. I will do my homework to see if indeed the CEO is pivotal. Like the CEO of Amazon left, didn't resign, he left. So is that a game changer for Amazon? I don't think so. He left the team in place to keep it going. Like I think if you take the Apple CEO out, wouldn't matter a bit. In fact, it would have done better without that CEO. He buried it in debt. So, hey, ask me what I think about Apple CEO. Not so great things will come out. Nice guy, but he gets too much credit for doing all this stuff. I mean, he was handed a boulder that's rolling downhill, like you wouldn't believe, like in a good way, like on rails. And so he didn't need much to do this well. And he chose to borrow all this money, and he didn't do much with it. He bought a headphones company, invested in taxi company in China, Didi. And then I don't know what else he did with the money. 120, 130 billion dollars in debt, but paid dividend and did buybacks, but nothing to show for. Imagine what Bezos would have done with 120 billion dollars of borrowing. Anyway, covered calls, a secret way to create your own dividends. You remember the days where Apple did not pay a dividend and everybody was on it? You got to pay a dividend. What are you doing with all this cash? You got 200 billion hoard. Pay a dividend, pay a dividend. So finally they started paying dividend. But at the time I was like, you guys can create your own dividends. Why do you want them to pay you dividend? So here's a way. So here's Visa. Let's say I'm long the stock and I was like, shoot, I need some income while I'm waiting for it to come back. So I can sell calls against my shares. Those are called covered calls. Please don't ever sell a naked call. That would be my advice to my family. Because what we learned from the Reddit era of trading is the SEC does not care about rules. So the bands can get together and cause a stock to spike out of nowhere and for no reason. And you go bankrupt, literally. Why? Because when you're shorting a stock, you will literally have unlimited losses if the stock super spikes. So for example, whoever was short GME the first time it super spiked, or Tilray a few years ago, I guarantee you they got liquidated their accounts. Boom. Blaming the apes. No, I'm not. I blame the SEC. The idea that, okay, it's not going to spike, I can't tell you it's not. So selling a covered call is different. So here's the scenario. I own 100 shares of Visa. I'm bored to death. I need to create some income. I would sell this call, sorry, reflex. If I own 100 shares, I can sell this call and collect $126 today. And in 50 days, if the price is at or below 240, that money should be mine. So I created $130 in 50 days from 100 shares. Why are people paying me this? Because somebody is buying the right to whoever is buying this call. I'm selling it. They're buying it. Whoever is buying this, once share is at 240, and they're only willing to pay $126 for it right now. So one day they can say, hey, give me your shares at 240. I'll say gladly, and I'll keep my $130. So I would miss out on anything above 241.3. If it rallies past that, I don't have my shares anymore. And I'm missing out from 241. Meanwhile, I benefited all of this. So when I sell a covered call, my worst case scenario should not be a loss. It should be only profits. But if I sell a call and I know I'm not willing to honor it, I'm opening the door for a lot of headaches. The first question I say, hey, Nick, I want to sell a covered call. My question is, are you willing to part with your stock? No, then don't sell a covered call. And I don't understand why people are not willing to get rid of their. You can rebuy it. I don't get this obsession. Oh, I can't get rid of it. The only explanation is if there's a tax scenario that they don't want to take the profits on. And even then, there's a way to roll out of your call, but rolling is just a fancy term for saying I'll book my loss and reopen it somewhere else. I'm not a fan of rolling. When I sell a covered call, I live up to it. So that is the covered call. Somebody said, when do I do it? I don't do it around earnings unless I really want to, unless the implied volatility goes through the roof and I see a real good opportunity. I want to sell the covered call when I have visibility, when nothing, like they just reported, I have a couple of months of calm, I can sell a month-long call, maybe twice. But if it's going into earnings and there's headache and I'm comfortable with my position, I don't want to bother with it. I've heard it's referred to the wheel. When you sell a put and then get assigned, then sell a covered call on this. Yeah, I mean, you can put names to it. So I usually say, yeah, the names are weird. I'm not a Wall Street guy. So I've heard elephant and broken wings, and somebody else came up with a zebra the other day. I was like, can you please tell me what the legs are? So we know I'm talking about the same thing. I'm not going to assume I know what a freaking zebra is, but I can assure you that I can understand the trade. So what he's saying here, Daniel, is the wheel. Sell a put, like we talked about, to own shares, and then get assigned, meaning you wake up owning shares, and then you sell a covered call. So they call it the wheel. They used to call it a buy right, except here you sell to buy right. You can get fancy with the terms, but the concept is always the same. Where are Greeks? Should I be bothered of Greeks? Yes, we covered the Greeks scenario earlier. Implied volatility, I did cover that, Carlos. It just basically shows how nervous people are. So if this number here, the implied volatility, is low, it means it's fairly stable stock according to market expectations. And you don't want to buy an unusually high like this differential here. What was it that reported? Twilio, perfect, implied volatility. I'll explain it again, no problem. See this differential here? Implied volatility in Twilio this week, this contract, is 120%. That is outrageously high. If normally it's like here, 40. So if I go to December, you'll see the difference. December is 40. So what does that mean? If I buy a call or a put here, I'm paying 3 times as much almost as I should, 2.5 times as I should. I wouldn't do that. I would buy one for November, accomplish the same goal with less premium, and maybe even sell one of these against my long. What? Can you do that? Yes. I can sell a covered call or a quote covered put, but they call it calendar or diagonal, meaning I buy a call out here or November that has a low implied volatility. So if I buy the 400 for $7, I'm not paying a hefty premium on top of normal, and I can sell Oh, I can't see it, so I should choose a lower one. Here, go to November. So if I buy a November 365, it's $10. And if I go, but it's only 50 implied volatility, and I sell one against it, collect $6. This should be nowhere near $6. So that trade would cost me 4-ish versus, but because this is tomorrow, even if price didn't move, this would fall 1/3. So you would lose, you would come up with $2 here tomorrow. So that would be profits in my pocket, $2 just from this collapsing tomorrow morning. But in this case, the stock is falling tremendously, so this is going to lose anyway. Okay. Yeah, James, call Rodrigo. He'll set you up with that. All right. So here's what I can promise you. And I can promise you that from the bottom of my heart. 1,000% effort. It is, I'm in California. I've been at my chair more than 12 hours already. I get up at 4 to get us ready. So when the market opens, everybody's ready with the lines. Throughout the day, I update my lines. I answer all the questions you need in the middle of the day about active trades you have in mind. Somebody told you about something. You want to tell me about your car? I'll tell you about my car. I don't have a car. I'll tell you about my son's car. So we can chat it up on whatever you want. And then we're going to share trade ideas and discuss them. We're going to revisit them at any point in time, whenever you want, day or night. You pop in, you hit me a direct message, we answer it. Nothing gets unanswered. And then on Sunday, I will do the homework and share Sunday evening, maybe a weekend strategy video for the week, about 10 minutes long, what I'm looking for. And in this case, I'm looking for one very specific thing that would bring about a huge rally. I just need it to happen. It's been ongoing. And Sunday morning, most Sundays, unless there's a holiday or something else comes up from travel, there is a live charting session like we're having here. I go through all the tickers you want. I promise you it's scheduled for an hour. It hasn't been under 2 hours in a long time. Last week, it was 105 tickers. The week before that was about 90. The week before that was like 114. So do I work only on large cap stocks? No, I do not. Somebody mentioned Palantir. That's a small cap member. I cover any ticker you want. Now, the penny stocks are a different beast. I can help, but you really need to be a specialist in penny stocks if you want to do that. But smaller companies like Fubo, STNE, what is it? Today I had an alert on Jumia. I didn't do anything with it. I forgot what the alert said. So, okay. So it's falling into support. So that's the third zone test. So if it holds, it's a good base. So if somebody wants to start longs here, I remember the message. I'll probably find it here. It probably said long with a tight stop. So let's see here. Expired, triggered. What's the day? Yeah, right there. Long with a stop. So if somebody wants to catch a falling knife, if there are no earnings coming, earnings in a couple of weeks. All right, so be careful.
And maybe we can do tickers after this. I don't know what the crowd is feeling. If they're feeling like some tickers now or.
Yeah, sure. They've been putting tickers in there.
Okay, it doesn't seem like they're just putting them like wild people where they just put like 100 tickers each. It looks like it's a little bit more.
XLE. Okay, I can answer that from my mind. I would not get long. Do you know what's the biggest element of the XLE? Okay, the XLE is yes, XOP and CVX. Not Exxon, XOM and CVX are 44% of the whole thing. I personally prefer doing those two stocks versus the XLE itself. I am not a fan of oil stocks up here. In fact, if you twist my hand, I will short them. I think we're being fed a lie about the shortage of oil. Are you kidding me? It makes no sense. It is a rigged market, so I wouldn't short it. I did short it very good with good results, and then not of late. So the last time I shorted the USO instead of the XLE, and I won, I shorted Exxon 3 times, I think, and I won. I haven't picked a fight with them. Levels wise, look left. Look at that major crash. We're back to the crash scene. It's not likely to slice through it. So there's resistance here, 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 and here. Not an obvious point of entry. Verizon, I shared along the other day. I'm pretty sure it's working fine. Facebook, we bought the dip, and I would buy the dip again. The Facebook scenario is people forget. Nobody gives a shit about what Americans think about Facebook. Okay? Nobody cares because the United States users are just a sliver of the total users of Facebook, which is the moneymaker for Facebook, eyeballs. All right. So the idea of bailing on a stock this good as it falls into a prior pivot is counterintuitive. So if you force me to trade Facebook right now, I'll be on the long side. I have to admit that it's going to pop. If it bounces, it will face technical selling into 340. But the company is on rails. It's still super healthy. The growth is incredible. The amount of money it makes is unbelievable. So forget the headlines. I've bought every dip on, quote, scary headlines. This one is really good, real bad. Like this whistleblower. I don't know what they were supposed, whistleblower is a term for like government cheating or something. I don't know if it applies here, but nevertheless, here it is falling. Intel gets no respect. Did you know that Intel makes more money than the 2 other companies combined twice over? So, and nobody talks about it. It's priced cheaper than banks. So that is a buy and hold for the long term. At some point, people are going to realize, you know what? The biggest beast in this industry is Intel, not NVIDIA, not AMD. But the other 2 have much better management. Intel's management now, they say is better, but it's up to them to prove it. Technically, this is support on a weekly basis. So yes, it's falling. It's a catchable knife. I did catch it and lost money on it. It was a small bet on a positive reaction that never happened, but it was a lottery ticket. And I knew that, hey, I risked X, I'm okay losing it. So that would be my statement on Intel. That's the big piece. Shorter term, I don't have any reference other than what I just told you that I was seeing on the weekly. So the last time it was here twice, it had a good rally. So going into 45, 46, it's a better long than a short. You sold a 32.5 put leap on Intel. Well, that is somebody that's singing my tune right there, Daniel. Thank you. Good job. Okay. Somebody put the capital letters on hood. That means I must answer you, Shishan. So if you weren't so nice earlier and you conversed back and forth, that would have banned you from the place. No, I'll get to hood. Okay, so hood delivered as bad a report as you can. He lowers the caps. My eyes are fine. I don't need to squint, so no caps. So hood delivered a crappy report. So that was a deserved drop. Now it's back to base. This is where you say, okay, they have 25, 26, I forget what it was, 27 million users. They are going to make it, figure it out. They're going to make it work. So it becomes a leap of faith. So if you caught the dip, make sure to stop out if they lose this, because then you have no reference. How low can it go? I don't know. I don't want to find out. Okay. So this was the statement that I had on hood. Use the lows, the flash lows. I forgot what they were. I've shared them in a video the day of the report yesterday. I forget what they were. I'm sorry. But use that flash low as the worst case scenario. And if they go below that, get out, because we don't know where they're going. All right. So that's hood. Microsoft is in all-time highs. I got nothing for you. It's one of those THTH. If you're fast trader, then okay. Amazon, okay, we'll talk about Amazon. That's fair. So best company on the planet is Amazon ever, in my book. Best CEO ever as a leader, not as a person. I don't care about his personality. No doubt from the results, he changed the world against all odds, and he was right. Nobody better than Bezos ever. So this is a company that 10 times its revenues in like 3 or 4 years, whatever it is. It is the cheapest mega cap out there. What did he say? I'll prove it to you. It's twice cheaper than Apple. What? Yep. Hold on for a second. 3.9 price to sales. 3.9. So let me put it in plain, simple English. You walk up to a pizza shop. You say, I love the way you do business here. I'd like to buy your business. I'm going to give you under 4 years worth of your total yearly sales to buy the business. The pizza shop will say, what am I going to do after that? No, I'm not selling it to you. That's the price that's on Amazon. Apple is twice that. Tesla is 5 times that. 4 for a gigacap like this. Boy, that is an amazing feat. So let's look at the statement for total revenue. Look at this gross profit: 26 billion, 35, 47, 65, 93, 115, 152, 180. What? 30 billion, 3 billion, 30 billion. What? Yeah, that is an astonishing company. Technically, let me show you my lines. All these are hand drawn. Somebody asked, what are my 13? They're nothing. They're special code for me to calculate things on the fly, like price to sales down here, but I don't use them. I only use what you see. Trust me on that one. So here, it is stuck in the middle of the range, literally, and it has an outside range outside of that. So we have a very wide, very consistent range with a wider, more consistent range above it. So the breach from either of those sides will be tradable. Until then, it's range bound. So look here, I have an opportunity to buy the dip or buy the rip. So I would buy the dip if it happens, because it's going to find support and rally back. I would chase the breakout if it happens from here or from here. It depends on my speed. Going into earnings, which is in 2 days, it's a complete coin flip. I have to admit, 2 earnings ago was the last time I sold an iron condor on an earnings, and it was it, and I won because the implied volatility was so wacky that I had a $150 wide, I think it was $150 wide iron condor that paid me 50% of the width of the spread. So I collected $250 per contract, and all I needed is Amazon to stay within plus or minus $150, and it won. And it was like a 1-day event. Well, it opened, the thing went to zero, almost, and I bought it back. So that's the Amazon. It has tremendous support, and it has a very sharp resistance line too that could bring more buying. So wide resistance zone, wide support zone, nothing to do right here from a trading perspective. Zynga, frustrating, man. So I think it fell in sympathy with the Chinese government going after gaming hours. So I'm still hopeful it could spike one of those days. Fundamentally, it's still strong, but it is not behaving right. So I can tell you that technically, if you bring me this chart, I'm telling you, I would tell you, it's in the hands of the sellers clearly. So what does that mean? Pops are being sold until you establish a floor. So this is an effort to establish. It is so important not to lose that tomorrow or this week, so that you establish a base. Step 1, establish a base. They couldn't. They failed. They came down. They couldn't. They failed. They came down. They can't. They're going to fail. They come down. So then the pop to 7 will be sold thereafter. But if you, the recovery starts not in a V, but in a process. Step 1 of the process, stop making lower lows. So when you stop making lower lows, that's step 1. What's step 2? Okay. So here, if you say, okay, no more lows, but you can still make lower highs. That's fine. So if it goes up here and they sell it, comes back to here, hold this or higher, and then it comes back to here. That's okay. Come down to here, and at some point they'll come to blows. So they're going to decide this, like here and here, or progress higher and then start creeping higher, and then suddenly you're establishing a higher high, and then so it goes from falling, stabilizing, rising. That's a proper bottom, not a V-shaped bottom. That's Zynga, but that's a lesson on how to look for bottoms. Zoom, great company, great fundamentals, tremendously cheaper than last year, and I would buy the dip. I would stop out if it loses this temporarily to buy it lower, because I wouldn't know how low they want to go. I have to go to a weekly. Look how big of a head and shoulders that would be. Technically, one can argue if it loses this and then that, it could come down to 150 or 115, which is outrageous, but it could. Think about the market. Maybe it doesn't do it alone. Let's say the market crashes for whatever reason. This one will go there. But I would buy the dip with a stop below this. How I would buy the dip depends on my style. Personally, I would have sold the credit put spread, and I think I shared it. Sell a put at 150. So here's a question. James is asking me, do I sell a put at 150? Let me ask you, are you willing to own it at 150? If yes, then yes. Okay, CAT has earnings, so no need to talk about it because it's going to be a wild card over the earnings. I can tell you it has sellers at 210 lurking and support. This is weekly, so this is proven support for 4 weeks straight. They do not want to be anywhere below 192. So dips into 192, 188 should find support. In the event they lose this, they're coming down to 170, and that's where I'd buy it, anywhere below here. If you buy it and it pops into 210, you're going to face resistance. At 220, more resistance. And if I ever get to 228 or plus, I'd be out. Snap, buy the dip, based on the video I shared with the peoples. Moderna bought the dip. I haven't checked on it in a couple of days. Oh, yep, the dip buying worked. This drop, based on, who was it, J&J with the pill, was ridiculous. We have 8 billion people on the planet. We can't sustain more than one company providing vaccines. Absolutely ridiculous. The fundamentals on this company, unless there's a honeymoon period on year one of a pandemic vaccine, that is incredible. I mean, now it's flows $1 billion, I think. That's a lot of dig. So resistance at 365-ish, 370. There's going to be resistance. This is an enticing gap, but the first step is to beat 359. Then they fill the gap. Then every level thereafter is resistance. So I wouldn't expect a super spike, although it could come. Saba is too violent, really, but we'll check it in a second. Somebody else put capital letters. I don't know, KUR. Oh, DWAC. You know, it's too new to answer. So DWAC, if you forced me, I would have shorted it 2 days ago, but they didn't have puts low enough. So it's a SPAC, right? Every SPAC that I know went back to $10 at least. So I wanted to buy a $10 put. They didn't have them. I'm not saying that's where it's going, but I wanted to buy it up here somewhere. So they don't have them. So no, this is 15 minutes. 3 days ago, 2 days ago. Anyway, within the last 3 days. If DWAC loses 52.4, it's going below 30, according to this technical thing. Pfizer, upcoming FDA decision. So you're telling me that there's going to be a binary event. So it depends on what you know about the company, what you think. I would rather play the Pfizer reaction. So technically Pfizer, if it loses 41, it could come down to 37, but it would have to be some devastating news, right? So I'm not sure. They've got earnings, they've got FDA, it's just a coin flip, any which way you slice it. Do I day trade options? I do trade daily. GDRX. Boeing, buy the dip. Where do you see Boeing? GDRX. So that's good RX. Good concept. Has support here. Has support here. I would not panic out if it dips below 40. I would chase it. So this is one of those I put BDBR. So buy the dip if it comes, or buy the rip above prior losers. So if it goes to 48, I think it has tremendous upside. But that's a big if. So instead of me jumping the gun and buying calls because it's going there, I should wait for the breakout. Or buy the dip into support. That's a valid thesis. No trigger, no trade, but it could be a thesis falling into proven support. So then I have something to get out. If proven support fails, then my thesis is broken. I know to get out. That would be BDRX trade. Starbucks. I don't like it up here. lose 110, 109, you're likely to get it at 104. Disney, since he asked if I did it, Nicholas, I like the way you sound like a super nice person. Oh, you meant Boeing. Okay, Carlos, we'll do Boeing. Disney. So Nicholas is asking about Disney. Thanks for being so nice with the question. So support until if it fails, you're going to get down to 160 or so. I would buy that dip, even though it could fall to fill the gap down to here. Now, let me give you a little tidbit on Disney. This is Netflix. Remember how Netflix used to trade? This is not the old Disney. They reinvented the wheel. This is Disney that trades on the number of subscribers. So when that honeymoon period of them signing up millions abates, goes away, it's going to come back to earth. It's not a reason to short it, but it's a reason to stop out. If I lose 160, if this one, whatever that is, 167, 166 and a half. If I lose that one, I doubt this will hold it, although this will be target one. So they could overshoot past this one, go straight to 152 or 148. In which case, I have a get long with a big capital letters and exclamation point. I'm not saying it's going there, folks. I'm just saying pay attention. You sold the 35 put on Riot. Okay. SPCE is a long-term hold. If you believe in space travel, this is the only viable option you have on the market. It is so close to this base that yes, it could fall and fill this little gap. This came up in the chat room today. I would catch the falling knife as an investment for the super long term. So how would I do it? I would own shares, or I would sell a put in the level where I want to own shares. So I'm long now. I leave room for error. No money out of pocket. Worst case scenario, I buy it at 15. Sold. Snap. I would buy the dip. Yes. Frank, I would buy the dip. Ally, long-term, naked call. Naked call, sell or buy? Buy. Ally. You know what company Ally came out from? No. GM. Yes. Boom. James on it. So is Scott. That's the old GMAC. What bankrupted GM, I think. So technically, this should be a bounce level. Look, hard bounce here. Hard fall, hard bounce on earnings whenever. Seems like it's repeating, although these are, whew, dang. So you better check. Maybe something else is going on. Because if you buy the dip here, or if you're still not stopped out, I would stop out below here because I don't know if this is going to hold it. So this candle is kind of interesting, 45, 46. Yeah. And this is a better level. So I'm going to put an alert for myself. I don't know much about it. So I'm interested here. Up here, I'm not going to mess with it. I don't know it well enough. Yeah, that is a machete with like a 2-inch handle and a 15-inch blade. Yeah, hard to catch. Let it flop on the floor and pick it up off the floor. Ford, I think I talked about Ford. The only way to evaluate the opportunity in Ford is to open up a monthly chart, and you'll see that it's not a place to start longs, but it's a place to chase above the level it failed at. I just did Starbucks, didn't I? Starbucks. Resistance at 115.7. Take that out. You could fill the gap to 119. And if you don't do anything until it hits 120, don't do anything until it goes above 120, then it challenges the highs. If it goes above 126, open air, you go. If it loses 110, you're likely to be able to buy it at 104. Yeah, I did this. Now I remember those words. Snap, buy the dip. How many times do I have to say it? Buy the dip, buy the dip, buy the dip. Okay, you got all these supports. And if it loses 48, I would stop out as a trade. Or take a small position now, bite one of many. And if it goes below 48, then contemplate adding somewhere around 40 or 38, because that's where it's going next. Upcoming with Rivian listing. Rivian came from Bezos. He's a major investor there. Amazon is actually. AMC. I went to the movies, Sasha. Does that matter? I don't think it was an AMC, was it? I don't know. Maybe it was in Edwards. AMC. Man, this movie is going to end badly. So let me share my big picture on AMC, and then you use your logic. Now I have to tell you, I would trade the stock, okay? But let's use logic. 2019, no COVID up to here. The stock is broken, the company is broken, the business model is in shambles, losing money and their fist, or losing, shrinking. And then the pandemic happens, crashes. Hey, all the theaters are closed. And now the stock went to like happiest that's ever been when there was no business open. On what planet this makes logical sense? No sense whatsoever. But you can't argue with this. So I'm just telling you, if you're doing it for an investment, consider my words. Now, this is a monthly chart. For 3 months, they rejected these levels. They did not close in here. So 36.7-ish is important. This month, it's ongoing now. We're late in the month. That would be the lowest close in months. Pay attention. And look left. You tell me this is a coincidence. If you don't believe in charts, look left. How the hell do they know to stop at 36? So clearly, this is an important level. So how they close this month is going to be important to the machines. PayPal, buy the dip for me. All right. So daily charts, you got support at just under 30. You got resistance at 44. You take out 44, you can get the chance to challenge 52, at which point I would exit or chase above 52 to get to 60. So this is a resistance until broken. When it's broken, it becomes a catalyst to the next level of resistance. If it's broken, it becomes a catalyst. So if you get long here, stop out below 33.6, maybe 32.4. Definitely below 29. I don't know where it's going. Let's see here. PayPal. I would buy the dip. Lucid Motors. Is it the next Tesla? Shame on you, Carlos. No. It's an emphatic no. Lucid and Tesla are in different cosmos. Okay, let me share a few. All right. So today I had a debate with a friend of mine, and he said some things that were sacrilegious. So he said, Tesla's so overpriced. Lucid makes better batteries. Like, wait a minute. I don't know that Lucid makes batteries, but he says they do. But here's the thing. He's saying it because he heard the headline. Oh my God, Lucid's battery range is whatever it was, 550 miles, whatever, 600 miles, whatever the range was super great. Well, Lucid's, the way I read it, the maximum capacity to make cars is 34,000 cars a year. So they don't even have a production schedule yet. They've been delaying. And God help the stock if they delay it one more time. So at its best, it can produce 34,000 cars a year. The last time I checked, NIO is up to 50. I don't know, XPEV is probably catching up, which is my third best EV. So Lucid has to contend with XPEV first. Like, you can't go challenge Muhammad Ali. You have to go through, Billy Bob and Billy Bob's friend and Billy Bob's friend's friend in order to get to Muhammad Ali and earn the right to fight Tesla. They're not even in the same cosmos. So until they start, and by the way, that high range, the car is 140,000. So it's a niche market. Even if they sell every car they can make at the 140,000 level, which they're not taking orders for, they won't even be as big as NIO. So to talk about Tesla, you're skipping ahead too far. Great car. Technically, this would be a great breakout. I would buy the stock for a breakout above 30 because it could get to 36. Okay, as a trade, as an investment, I'm telling you my opinion based on what I just told you. It's a niche market. It's not an insult. By definition, 34,000 cars is not a lot of cars for a car maker. So my homework is limited to reading their website and reading some other people's opinions on it and get the data so I can make my own opinion. So I heard the headline, holy crap, yeah, that's a long ways. But then I looked into it. The models that do that are way over 100 grand. A Tesla's 30,000, 40,000, I can pick up a Model E. E, right? Three. E backwards, sexy. Okay, I get it. Did you know that they're supposed to spell sexy? Only the E is 3 backwards. Okay, let me see here. I skipped a couple earlier. Lucid. Baba, boy, unbelievably strong company. Unbelievably. I covered Tesla in detail earlier, Maury. Sorry about that. So Baba, only company on the planet that can generate $78 billion in one day. And yet can't find a floor. It's just painful. Look at it. Look at this channel. Ding dong, ding dong. If you force me, I'd be long. So the next trigger technically for Baba is 183. Then it could get to 200. Earnings are coming. Singles Day is coming. You know why it's called Singles Day? I'll throw that. Think about it a little bit. And right, because it's all single digits, not because it's people who are not hooked up. So so the whole assault on Baba is the fact that they don't want companies to be so big in China and dominant. So what if Alibaba on purpose tones down Singles Day? And what if the headline comes out, only 50 billion this year versus 75? Or worse, what if they cancel Singles Day? Yeah, that's going to be a big one. So be careful. I like the company. The metrics are incredibly cheap right now. Incredible. That's the second cheapest mega cap. That's a new word for you. Mega cap. Between the mega cap and the giga cap, there's a mega cap out there. 4 price to sales, 20 PE. What? I mean, what? That's dirt cheap. Dirt cheap. Beto. Do we want to talk about Beto? So Beto is, I wouldn't do Beto. It's an ETF. It's not Bitcoin. It's an ETF that's, I think, is going to try to track Bitcoin futures. So Bitcoin futures are BT_F. I have them here somewhere. I'll show you. Anyway, I'm drawing a blank now. Oh, there it is. Those are Bitcoin futures. Basically tracks the price of Bitcoin one day. So I would rather trade something directly. The idea of what happened with Beto is bullish Bitcoin, not because it means now funds are allowed to hold their futures. But it's not a thesis that I need to go out and buy Bitcoin. I still trade Bitcoins based on the charts, and I've yet to lose money on trading crypto. My trading of crypto is so simple, that's not even funny. And I'm going to give you a favor here. Do you a favor. Look into something called staking. And I'm going to tell you what it is in crypto. Actually, I'll tell them in the chat room. I'm earning 10% in dividends from crypto. All right, we'll leave it at that. So Beto is too new to talk about, although it has options immediately. That's pretty crazy. Balling, I'm telling you, I feel like I'm thieving somebody. Well, join me and I'll tell you. Right. Rhonda has one, but it has to be a stable coin. You can't just go in there. What type of black magic? Hey, I remember days when I used to get 17% from a bank on a CD. Of course, mortgages were up there too, but well, I do get 12 and 13%, but it's not a stable coin. The one I have is a stable coin. So the only way I can lose money is if the company goes bankrupt. In the meantime, I'm earning 10%. Yes, I do. All right, so here we go. The ticker next, I saw, hold on. Affirm. Love Affirm, not up here. So let me show you where I went long Affirm in the chat room. Down here. I drew this path and I said, oh, they're drawing the bowl of a cup and handle on the trigger, went long. Whoop. and now everybody loves it? No. This is where it's THTH. I would buy it here. It's off my to-do list until it falls to earth. And buy here. It will. Maybe it takes 6 months. Maybe it takes a year. Maybe it takes a crash tomorrow. I don't know. I'll set the alerts and let the alerts work their magic. Okay, I saw SOXL twice at least. So this is a accelerated ETF. It's basically 3 times the semiconductor. So recently, I'm going to answer your question indirectly. I did a trade setup on XLK. I said, watch XLK, set your alerts. This is possible. Look at this nice broadening wedge. We could break out here or dip to break out. Either way, it's BDBR. Buy the dip if it happens for this, or buy the rip. SOXL has resistance above and support below. Right here, I can't do much with it. If I buy it here, I'm hoping it rallies. I should wait for a breach of 46.5 at least, knowing that there's going to be a lot of sellers lurking here, but that is also a trigger higher. So I could do that, but I don't have an edge. So I'm hoping if I buy a call, it meanders lower a couple of days, I'm losing money, I get stopped out. What's the point? I miss out on a couple of dollars. So be it. Have no trigger, no trade mentality. So buy it on the dip below 42. So you're closer to support, or chase the rip after it starts. Coin, I went long a long time ago on the dip. Up here, I wouldn't. I would buy it on the dip. So buyable zones are 280, 290. Maybe they don't come. 300 is a, what do you call it? Psychological level. So we liked it down here. Unknown short-term risk below because I share the long. So it is, I've done trades on it, but up here, I wouldn't touch it. It's just, I don't have an edge. Home Depot, I bought the dip. I forget this one or that one. And it was an amazing win right away. Up here, no way. I'm blind. So I would buy the dip again when it happened, if it happens. And it will happen someday. So too high to chase, too hot, too short. If you want to short it, you buy a debit put spread out in time, say 60 days at least. And that costs about $3.50 on $10 wide. Those, if you find those parameters, you will have a good risk reward. So you can double your money, maybe triple it if you're lucky, almost. And you have time on the clock, and it's not a harsh short. IBM, one of the worst management team on the planet. I cannot believe that they were allowed to go this long with being this bad. Shrinking for 10 years straight, if not longer. 20 some quarters bad to bad to bad to bad. And they still talk. I want to tell you, I shorted it the one time I saw Ginny Rometty, the ex-CEO, on TV with Apple right here. Tim Cook and Ginny Rometty had a conference that was well advertised on CNBC when I used to watch CNBC. And I said, short that company, they got nothing. They were talking general terms. Oh, we can do this. It's like, it could be any company saying these words. So fundamentally broken company, and Ginny Rometty is still in charge. She's not a CEO, but her policies are still going on. The new CEO is not any better. Now, technically speaking, I love the dip. It's falling into support. See, I don't mind trading it positively. So if somebody wants to catch the dip here, that's fine. Wow, check this out. Whoa, did you see what just happened? Whoa. Okay, so volume profile. Man, this is turning out to be a long class. How much are we charging for this? So this volume profile shows, if I show the current period back to August 5th of last year, this is the volume that happened. This line is the one that was busiest. 124, 125 was the busiest by far. Look, by far. Second busiest and third right there. Look at the up here, not a lot. If I zoom in a little bit, boom, So recent activity is all up here, and they lost it. You know what that means? That a concrete wall above you. So if I were to trade IBM, I would sell put spreads and hope that support holds rather than hope for a recovery rally. Jumia beeped at me today. It's falling into support. That support better hold, Marco. Otherwise, he going down. You need XYZ to buy IBM. What for? They got nothing to offer, James. You know, I remember when I was a kid. I'm 54. I remember when I was a kid hearing about IBM computers playing chess with Kasparov. I forgot his name was. And that was, artificial intelligence up until now, and they still don't monetize it. PLTR is stealing the show with their artificial intelligence. A whole bunch of other companies like that too. I knew it wouldn't be them. Yeah, PLTR is a buy and hold for a long term. Buy the dip, sell puts. I sold puts at 18 and 19 in the chat room on PLTR. What? And I also said, don't get long into 30. And here, watch. So in the chat room, somebody came to me here. What do you think of PLTR? They know I'm a fan. I was like, I wouldn't buy it here. It's into prior fails. I would need to see it clear 30 and a half-ish to believe it. Then it runs. So if I bought it on the dip, yes. I expected sellers here. That's fine. I can sit in it. Higher lows, good progress. Yesterday, it had a weird dip. And then if it approaches here and I'm not long, what do? Do I get long here if I'm not long? Don't be afraid. Say it. I'm waiting. No. Yes. No. Obviously. Okay. No. I get long higher. If I sold puts and put spreads here, I did say I would sell a put spread on the dip, and the dip came, and I said, okay, I would sell a put. Anything below 22, I'm willing to own shares. In this dip, I sold at 18 and 19. It was superb. Easy win. Easy win. That's a company that's growing fast and has good fundamental. Okay, we'll talk Apple. Of course, we'll talk Apple. Sorry about that. Apple is the man. It's coming up on earnings. So here's the ticket for Apple. You find a shiny, what do I call that? Quarter at your house. And quarter is easy to see. You flip it a couple of times, maybe 3 times. And then you take the average. And then you do the opposite. You pull a Costanza. Short term, overnight, we don't know what it's going to do. Clearly has strong fundamentals. So the trade in Apple would be after the earnings. That would be the trade with conviction. If they sell it, I don't hope they sell it, but if they sell it, it'll be a good thing because then I can go along with conviction into this bunch of support because I'm confident the number is going to be good. And if they sell it, it's because some moron out there and says, oh, it missed estimates. Meanwhile, it grew this much and this much cash flow, but it missed estimates. Get long. If it rallies, it's going to find sellers here. It's going to dip, get long to get bust out. So you could get long now or short and hope for a good reaction, but you have no edge. Remember, I want edge. So if I go to Apple right now, how could I put it into action? This is the implied volatility, 50. What does the constellation look like? And it's thinking. Boom. Look how expensive the puts and calls are for this week. So if you were to tell me you just bought Apple calls, I would say you overpaid. And just for the fact. So if I go out to December, those should be in the 30s. Oh, 20s. So you see the difference? You double paid. So relatively speaking. Now, current price, 149. So the market makers are expecting about a move of $4.50 tops, $4 to $4.50 up or down. So tomorrow, at the day after this week, it should not rally more than $4 and change or fall more than $4 and change. Anything beyond that would surprise the market makers. So that's the short-term sandbox for Apple. Long-term, the company's on rails. Okay, so I traded Apple and it delivered profits and I got out because I had a thesis. I posted in the chat room. I forgot what it was. I said it's going to 150. So last week, I don't know what day, I said I'm buying the 150 November 5th call. and then it rallied, and then I sold calls against it to turn it into a diagonal, and then it lollygagged, and I was like, you know what? I'm just going to close it. I closed it. I have not re-engaged. I think the better trade is to do it with conviction after the market happens, the earnings happen. So if it does dip and I wanted to get long Apple, that's a gift. Now I know that anything into 140 plus or minus $2 should find buyers, strong buyers. So there you go. That's your to do. If I wanted to get a midterm swing on Apple. Strong. I mean, I would be shocked if they say something bad. Okay, UPST, you've been asking. I went long UPST. You want to know how long? Back here. It was inside this box for so long. I said, this is too quiet. And then boom. And then people ask me, what am I doing now? Nothing. So if you force me, I would buy the dip here or here or here. But I'm not going to short it. Yeah. So I had people that wanted to short it here, and then they came again here from the chat room, and I said I would buy a debit put spread out in time, $3.50, $10 wide, cost of $3.50, and they may have done that, and if so, they should have profits. And I said I would close those profits. So that's UPST. Fiverr, I did go long on dips. I haven't looked at it in a while. Ooh, shoot. Okay. So please hold 173. I went long when they rejected this. I said the company delivered growth because of missed estimates. You're penalizing it, and then this happened after the trade. So let me look at the chart. Maybe I can see. Look, grew sales 60% year over year. Lowered guidance. Business is fine. Expectations were wrong. I can catch this falling knife. That was on this drop. And the way I did it, I sold the put spread down here. Most likely puts or put spreads, and it didn't even come close to being in trouble. I said this was the base, this was the trade. I knew the expectations were wrong, and they did this. Now, if they lose 172, this guy, they may come down here. I have an alert. Look how close it came to the alert. And I'm going to put another one to buy the dip here-ish. Start looking. Romina, if you join the program that they've been pitching here, you can talk to me about options all day, every day. I don't think we have specific classes. Although we've talked about it, you're going to have to sit and wait. That's going to be down the line probably. But that price right there will get you in for a whole year of chatting with me in the chat room.
Yeah, just keep in mind that the education comes in the trades as well. Every trade that
every
Nic puts
video
out,
I share has everything I'm saying right now. I promise you, I don't cut corners.
Yeah, it's just the delivery of the education. Like it's not like a classroom setting, but it's, ongoing everyday education videos, trades with education, and also the sessions on Sundays that we have where everybody that is asking a question gets it answered. There's nobody left behind basically in the chat room or in the sessions.
So Rodrigo, they're asking what do they get if they join. You tell me. I have no idea other than the chat room itself.
So you join the chat room with Nic. You have access to the chat member sessions only on Sunday. So that's something that it's only for the chat members. It also includes a free courtesy laptop that would be a laptop that would be sent after the 7-day money back guarantee period. So you can even go ahead and try it for 7 days and, take the options education seriously instead, early before it's too late, where like we have people that really mess up their accounts, and, we definitely want you guys to be responsible, to trade responsibly.
So Romina is asking weekends link. I think what you're asking is, do we have the weekend thing included in that? Yes, I post the link for the Sunday meetings in the chat room. Every Sunday is different. I host them myself. I do this out of my own time. Nobody's compensating me for this one. And what I do is I use Jitsi, which is the backbone of Google Meet, I believe. And it works out like a charm. I record it, I share it, totally casual. What you want to talk about, we talk about. No DT yet. I don't recognize the ticker, so let's go there. I'm curious. I keep saying DT, DT, DT. Where's my mouse?
I think it's like an information technology or software. I actually own that in my long-term.
Dynatrace. Oh, good. Shoot. Okay. So calamity. Is this before the day report already? Yeah. So let's see. The day beat estimate surprise 2%. So look into the fundamentals to determine whether it's warranted or not. Technically, look, this place was the base for this last stent.
They
So
didn't
this,
beat earnings. They didn't
Right.
beat.
It didn't? Okay. But you have to see if they're growing to last year. So it looks like they have a healthy P&L. So on the face of it, although a small company, nothing is outrageous. Let me look at the quick statistics. 30 PE, so not cheap. The PS, price to sales, is not cheap from that perspective, but they're growing. So I don't know what they said that spooked people. I would assume there is a buyer here. So 67 is a support level, 68, 67, 66. If that fails, they could overshoot down to the second place, which is 62.5. I would stomp my foot down there if that happens. I definitely would not be shaken out of the stock down here. Free cash flow and long-term, okay. Well, every situation with cash flow is different. Look at not Apple, Tesla's situation. If they growing at without burning a lot of cash, then it's okay, right? So here, look at that blue line. That's a dip I would buy, as much as I know, right here. So James brings up the fact that what about negative free cash flow? So I'm looking at cash flow from operations. This is to exist. It's positive, 200 million. So I think they can do well. I wouldn't be shaken out. Here, okay, I'd be wary. Down here, I would be comfortable. So if I get here long and I don't get to stop out and it falls down to here, it's too late to stop out. I wouldn't add, but I wouldn't stop out. So this is a place to test along. If I'm long, I'm not shaken out until they lose this, because they could come to here. Hopefully I worded that right. The P&L still looks good. You have to read the information to see if they raise an alarm, an ongoing situation. Like, oh, whatever we've been doing so far, because so far it looks good on paper, it's going to change because X, Y, and Z. If they don't say that, then this is just a give back. In steel. Oof. Steel altogether is a tricky situation. So my son is a welder. He's a fabricator, so he specializes in building trucks and stuff. So steel prices like quadrupled on him. So every quote now is like super expensive, but it's all material. So it's a tricky situation with the dollar moving. It's big boys only or big girls only. Well, that doesn't sound right. Somebody with a you got to be politically correct. Hold on. Somebody with a high tolerance for pain. Boyle, what is that? ETF. Ultra ETF. ProShare natural gas. So natural gas is on fire. If you want my take on EVs, okay, I'll throw it down. EV is not the future. What? Everybody says it is. Okay, I get it. But let's use logic. 80 to 90 million new vehicles a year. 80 to 90 million new vehicles a year we make globally. Where the heck are we going to get batteries for all of those if it was just purely EVs? There's no way. We have to have either QuantumScape succeed so we can have solid state batteries. Yes, I do know about that stuff. I used to be an electrical engineer. Or we need a hybrid of sorts. My money is that Toyota will lay down the actual replacement to ICE. So the internal combustion engine may be on its way out. It may take a decade to get it out, but the replacement is not going to be purely EV. It's going to be a blend. And most likely, Toyota did the EV market. The Prius allowed the hybrid to be acceptable. It made it mainstream. Hybrids were failing. That funny looking Honda, whatever else before that. So then Toyota came out, lost millions on the Prius, and then it established, hey, everybody drives hybrid. And then from the hybrid, became a short step over to EV. And then Tesla came in, perfect timing, boom, cool looking car, sold like hotcakes. I live in Southern California. Unbelievable display of Tesla. I mean, if I live in a neighborhood, 70 houses, I think, in my tract, more than half have Teslas. I don't, but more than half have Teslas. And now, guess who's number two? Any guesses? What company I think is going to steal the EV market absolute numbers? Absolute. Nope. Nope. VW. Bam. James is on it. James is my man. Yeah, VW, because it has Audi. Audi is the most what do you call it? Ubiquitous EV that I see in my neighborhood. The Audi e-tron. Boy, that thing sounds sweet. I mean, I'm a driver. I'm a race car driver in my prior years. I need the growl under me. That's why I will never buy an EV. But that the Audi has a nice tone to it. So VW is the biggest car maker on the planet. I think they will have the bulk of the EVs. Tesla is going to have its own niche market. I mean, it's a beast. So it's not going to be all EVs. Ford, I'm starting to see a lot of Mach-E's, although I think it's a travesty they called it a Mustang. It should not be. I need a GT growl for it to be called a Mustang. It is cool though. The wife said she would own one. I wouldn't. Oh, my son just bought a 2000 Excursion, a beast, 10 cylinders. All right. So that's his second vehicle. He also owns a 2010 Corvette. So hop into the chat room. We will do this all day, not talk cars, although we could. Nuclear power, most efficient per textbooks. So the idea, the one goal I have in a chat room is to eliminate as many mistakes as possible. 8 years, I raced spec racer Fords with the SCCA for a long time, since I was 22. I started out with Skip Barber in Sonoma. So it used to be called Sears Point at the time. I've done other races along the coast, but nothing off of the US coast. Now I would race a lawnmower if you give me. Motorcycles, geez, no, not for me. My son did dirt bikes for a while. He would do now, but he's too tall, 6'4"-ish. Go race FUV. Any thoughts on Spire Global? I don't know. What's the ticker on Spire? Who's not being nice? Yeah, new Harley. What is it called? A Dana or something like that?
Hey, Nick, what do you think about oil right now? Do you think it topped? Because
Oh, yeah. I already mentioned that earlier. I would
did,
not be
right?
long oil, but I wouldn't
Okay.
short it either, because it's literally a rigged game. So if OPEC existed in the United States, it'd be an illegal activity, right? You cannot price fix, let alone price fix and fix your production output. It's just, they literally rigged the game. There's no way you can convince me. We're driving less, we're flying less, we're zooming more, we're working out of home more, and we're using more EVs. How is oil in demand? So XOM for yield. Yes, XOM is excellent yield, but you got to get into it right so you don't eat a lot of that yield with one big drop. So I'm confident that you could miss out on 1 month of yield to find a better entry point. Would I be able to provide some one-on-one help? Well, I don't have one-on-one sessions. There's no way. I have hundreds of people, if not more, actually. I have thousands of people. There's no way I can do one-on-one. But you ask me a question, I will answer it. No question goes unanswered. And sometimes the answer comes in the video, second best to one-on-one. So if you have questions, I will have your answers. Isn't that the point of one-on-one? But I don't have yet one-on-one programs. They're working on something like this, but I don't have anything for you right now. But it's not going to get any cheaper than what you're getting today. I mean, I would never price this thing today, but that's not my gig. I've been working with Benzinga since 2011. So mine was unanswered. What was it, Eduardo? And we're not in the chat room. Everybody in the chat room's question gets answered. And if they miss me, they should DM. If I miss the question, they will DM me. And then I never ignore a DM that pops in my face. James, I offered at Iron Condors weekly, but I prefer 4 weeks-ish, 3 to 7. I've done ones that were 8 months out. Oh, okay. We'll get the Spire. But by the way, this is not the chat room. We have 500 people in here today, last I checked. Now it's down to 150 or so. But anyway, so Spire. Let's go. Spire. Oh, SPAC. Yep, ish. So you're going to have to do homework on the company itself. I can't tell you anything about it. It is a micro cap. Market capitalization right now is under $1 billion. So it's up to you to study the company, because the chart doesn't give us much. It tells me that there are sellers into 7, and that's about it. AbbVie. All right. Just follow the instructions in the box. I tried longs in AbbVie. I got so frustrated that I closed for a slight loss. I think they would have come out all right, but it was very frustrating. So I was waiting for a pop, and I got tired of waiting. So this is a daily chart. It shows that this box is still the playground, and they're trying to get out of it. Look, they're still stuck in it. So sellers at 110, 111, sellers at 112. You beat 110 and 11, you get the chance of fighting 112. You beat 112, you get the chance of doing whatever this happened here. Cannabis as a sector. Oh, Sava, please, James. Okay, so we'll do Sava and then Tilray. How about that? So Sava, this drop and this rally, people said the drop happened on good news. I was like, how could this happen? Then it happened again. So it's at base. It's not the time to panic, but it is a binary stock where it goes on and off, because it's the range. It's the healthcare, biotech. That's the nature of the business. Every day is a surprise earnings report, basically. So it is. You go on faith. The chart says, okay, this is solid support. So if I'm long, I stay long. If I want to get long, I can. But know that it can be a blowout. So I wouldn't go all in. I wouldn't add to my risk, because it's binary. Okay, what was the other one other than Sava? Cannabis. So I used to say CGC is the leading cannabis company I want to trade in. Now I say it's Tilray, because Tilray did more with less. So they're both 1 and 2. This one did it without $4.5 billion. And I hate how it trades. Also, I was long. It cost me a little bit. I made some money. I didn't book it. And that was like so frustrating that I got out. And I got out on the pop. I can't remember what day. It went up big. I was like, oh, shoot. Now this is a give me. I had sold the put spread at 12. It went in the money. I had time on the clock. I didn't panic out, because I would have bought the shares anyway. And then it popped to 12 and above. And I got out for slightly green. Even money. Let's call it even money. I was like, every time I'm in trouble and then I get a pop that gets me out of trouble, I always take it. It's a gift. I always take it. So as a sector, pot makes sense. What doesn't make sense is why the White House hasn't done anything yet. How easy is it to legalize pot when most of the states did it already? It's a formality that stops them from doing acquisitions, banking, and all of that. I'm pretty sure they have so much inefficiencies just to be able to dance around the law. So in the long term, they will do well, but man, this is trading hideously. So having it bounce so hard from here at $10, that would be my, you know what? I think it has a gap back to 9 something. Hold on. From memory. Yep. Look at that. 9.5. So anything below 10 is a buy for me, for hope of a long-term recovery. I will buy it and close my eyes, risk X dollars, and just sit on it. Or sell a put on a really bad day to buy it. So if I can sell a put at 8 one day and collect a buck or two, sweet. That's my break-even point becomes a 7 or 6. All right. Merck, somebody wants Merck. Isn't that a headline stock too? Those are not good to sell puts in or sell put spreads, because to win by selling credit spreads, credit put spreads, iron condors, credit call spreads, bear call spreads, bull put spreads, or the same names. I'm changing them. You need a stock that offers nothing. You want nothing to happen. And these guys are the opposite of nothing. Headline galore. Every day is an earnings potential. Look at this. Seesaw, woo, woo, woo. And they don't pay that much premium. This one doesn't. I don't remember it did. So then I'm taking risk, exceedingly big risk for no reward. That is too cheap. Too cheap. This implied volatility, how is it 20 when the stock looks like this? How is that implied volatility 20? Binary means it could go either way and I have no edge. A coin flip, binary. It's either wrong or right. And I don't know what the headline is going to be, one, and I don't know what people are going to react to that headline. So I don't have an edge. So I steer clear. But I do know levels. So if I see it do this and I see the level and I look left, I go, boy, headline or no headline, that's a buyable dip. Look at this. That is the pandemic. The world literally stopped. And this is what it could do. So that's a good. So next time it comes down here, buy it. Call that a tip. 76, I'd buy it. 74, I'd buy it. 70. When I say buy it, it's a place to consider longs. I should rephrase that. It's reflex. This is a buyable dip into 77. Since I'm doing the homework, this is a buyable dip. But if I look at the premiums, they're not there. So I'm not sure I'm going to do it, because I'll look at it as like, I'm taking so much risk for not a lot, unless it's really clear, like down here. Yeah, I'll do it. TTD. So the trade desk is a violent mover, but at least it's somewhat predictable. There's no headline. It's not biotech or anything like that, right? So let's go see what kind of reward it gives me potentially. So to see if there are premiums. So yeah, big premiums, bigger than the other one. So we're looking at big numbers. So at least I can play with something here. So yeah, trade desk would be a tradable thing. I haven't traded in a while for myself. Let's see here, my last comments, resistance, and it's still in effect. New leg lower, that was the breakdown. As it was falling, I had this line, new leg lower if it happens, and this was the bottom of the leg that I had. It overshot a little bit. So now they went back. So now we have a range. So this box suddenly became bigger. So if I were to draw another box, I would, same top, but now the bottom here. So now we have two boxes, but I'm not going to put it there. I'm going to do this instead. So this is a buyable dip for potential bounce, this zone. It should be here. I'm going to put it here. It's not a hard line in the sand. It's a zone. This is support. So I'm going to do this. And next time somebody asks me about it, I don't have to redo the homework. This is actually support. Buy the dip opportunity number 2. Somebody got to go. Christine, you're leaving us for dinner. Come on. All right, SoFi. I just closed my longs. It was a huge win. I didn't play it perfectly, meaning I left some money on the table because I got a little cute with it, but it was like a 5x or a 4x. So I'm waiting for the dip. I'm waiting for this green to happen. So I closed this week here, I think. So I missed out on this part. And I'm waiting for the dip. I will re-engage long. Look how close to my re-engage long it is right now. That's my level act. It came close. So tomorrow, if it triggers, it'll beep at me, send me an email. I will start looking. Credit put spread. If it breaks above this one, she count. Sundial, I'd prefer Tilray, but if you like Sundial, everything I said for Tilray applies for Sundial. Broken stock. You have to look at the company and see its prospects. This is a strong base, How far away from its strong base is it? These two candles are weird. So I will say 67 cents should have held, but now we're talking pennies. So yeah, it's pennies, but it can still lose you 100% of your money. I'm pretty sure they're recording this. Sundial, SNDL, it's a company, Sundial Growers. Engaged into production and distribution of flowers, pre-rolled, whatever. You must be thinking of something else. TTE, I don't remember ever doing TTE. I don't know what that is. Oil? Yeah, not for me. It's too high. Closer to 48, maybe. If it ever comes down to below 47, that's a better entry point. Technically, it's too high for me, so I would need to look at. Yeah, same concept, same comments I said about the XLE. This is a lot of scar. That is a major accident scene. When you go into a major accident scene, everybody that got stuck up here will be exiting. DraftKings, I believe we bought the dip. Okay, so I said, wait, we're still on a weekly. So what I said is, if it bounces, beware of this. Look, be watchful of this on the bounce. Yes, it had support. Be careful of this, because if it bounces, it's going to find sellers. That was my video. It's going to find sellers. And if they come back to test it and they fail, they might want to do this with support everywhere. So they fell before bouncing, really. And they came to first level of support. Look, that is my downside target right there. They hit it. They bounced. So unless they take out 51, I think this scenario could still be in play. We already talked about it. I'll do it again in a second. LUV. Viable dip, but you know what? The airlines are shooting themselves in the foot. This would be the airline I'd buy, by the way. This one was born and bred on skimpy margins. You remember the no frills airline? This is it. However, losing this, I'm not going to say it. Technically, losing this, should I say it? I don't want to say it. No. The technical downside of this is $20. So I don't want to say it. I would not be surprised to see it under $40. If we had a market crash, this one will be under $35. But I do want to buy the dip against this. So they still have, so the technical aspect of this, look, I drew this. See that one? I said, I expect sellers, so I trim profits, because they did the inverse cup and handle. Watch this. So technically, that's the threat. That's not the forecast, please. I'm just telling you that this needed to hold. Because it didn't hold, now you have people who are saying this is an inverse cup and handle, and usually that brings about this much pain, okay? To me, I'm saying there's a whole bunch of buyers over here. So that should be tremendous support. I would buy the dip in here, or try to. There's a whole bunch of buyers here. Same deal. I would buy the dip and I'll put the alerts for myself. This could be the technical target, but there's going to be support, and this means that the stock market has crashed. Or what I fear that the airlines are doing to themselves. I said they're shooting themselves in the foot. Hold on, let me put my alerts before I forget. And these are just to get my attention. I don't put a comment, so I'd be forced looking at it. It's like, what did I say? So the airlines, they're already short staffed. I flew a few times and we waited on the tarmac for the hostess to show up. I know it's a hostess because she ran into the plane and we were waiting for her. Okay, I'm here, we can fly, for one person. So they're already short. And now all but one, I think Delta or American, one of those two said, please don't put mandates. And I think they went ahead and put mandates. So you pissed off 40% of your people, and you're going to have more shortages of labor. And that's why they're canceling a crap ton of flights. They don't have people. So they are shooting themselves in the foot. So this is potentially like, didn't LUV just cancel like 28% of its flights one day, one weekend or something? How often is that going to happen? How do I create consistency? Michelle, by booking often and booking fast. So yeah, Guillermo, my wife was flying and she had to dance around that stuff. So consistency comes. Perfect question. I'm so glad, Michelle. Listen, stop all the talk about tickers and all of that. What makes a difference between a pro and a willy-nilly retail investor? And that's not by pro, I don't mean like making a living at it and that's your job. I mean having pro habits. Okay, how do you create consistency? By having a system, a way that gets you looking at charts. Did you see what I just did? I put two lines. Okay, that's a system. I do hours of these homeworks for you, and I share it with you. All these alerts come your way, the ones that matter. I literally have about 30 in my email box that I need to go through by tomorrow morning. So my day is not even done. I'm starving right now. I don't know what happened suddenly. So you do homework. You set the triggers. What do you do with the triggers? You do something with them. And whatever you do with the triggers has to have a system. Like, how do I get long? I sell a put spread. I sell a put. What level? I use this delta. And what level do I book? If I get X% of my profits in so many days, I get out. So see you later, James. So it is a system, and being methodical, repeating. And if it's not working, you know it. So you change it until it works. And you repeat, you get consistency. And the way I do it, mathematically, I take bets that are 85% chance of success. And guess what? That's about the success rate I get, 85 to 92. So it lives up to the odds. The reason why a casino exists is because the odds play out. Same as the options. It's not a casino, but it's casino-like concept with odds. It is so black and white. It's not even funny. So I'm running out of gas here, Rodrigo. Anywhere you are, I'm out of energy drinks, and I'd like to wrap it up by saying this.
Yeah.
The options here give me the odds, so I don't have to be guessing. So when I'm the house. When I'm selling options, I'm the market maker. I'm the tiny little market maker. So when I sell this put, the person buying it from me has a tiny chance of winning. That's like a casino. You go in, you're playing on roulette. You say, I want 32 red. You have a very little chance you're going to win. The casino is making money off of that bet. And one time it pays out. So I'm making money, and one time I pay out.
All right. So let's do this. So let's do some closing remarks here from Nic, and I'm going to stay for a couple minutes once Nic heads out, just to answer any questions if you guys have about joining the chat room or anything. So what are your closing remarks here for the current, the people that are trying to join the school? I'm sorry, your options chat room.
I can see that there are some people that are engaged and they would fit so well just from the conversation. And thank you for thanking me. It's fun for me, I promise you. And we're doing something right. Because we can't be doing this for 10, 12 years if we're doing something wrong. We wouldn't exist. But I've been with Benzinga since 2011. So, and it's by chance that I found them. I swear to you, it's through Twitter. Somebody said, hey, do you mind if I pitch your name? So I'm glad they did, because it's been heaven. The team, Rodrigo, who gives their phone number? That's Rodrigo's cell number in here that popped up somewhere. Who does that? Nobody does that. Yeah. So hopefully I'll see you in the chat room. It's big number, but I promise you, you're spending more than that on some fiddly stuff that's not going to change your life. I'm not going to change your life. The methods that I will offer in just reading charts in plain, simple English. You see how I read charts? I promise you, it is so intuitive and repetitive over and over. You'll get it. You will get it. And here's the funny part. I have a lot of people in the chat room whose charts look just like mine now. I look at they offer a chart and they go, why are you still in this room? Because you can clearly have your own room, but they're still in there because together we trade better. We have a bigger watch list. We watch out for each other's back. We're on it. Hey, look at this is moving. Look at that is moving. Somebody saw a headline pretty quick, so we catch everything faster. Anyway, that's it. Hopefully I'll see you there. It's not magic. It's a method, repetitive.
Yeah, 1 second. No, absolutely, Nick. And I appreciate your time here being with us and, just being able to come here and go over all the education here about the options, because there's a lot of current members here that you already have. So that's pretty nice.
That's pretty cool. Yeah. So in the room, I mean, they would call me out if I'm lying, right? Yeah. So hopefully I'll see you in there. This was fun. I appreciate it. Thanks, Rodrigo, for your efforts. You're always 100%.
Yeah, no worries, man. Appreciate you here. And yeah, definitely thanks for everything here, Nick. I'm going to stay here for a couple of minutes, guys, answering any questions. If you guys have any questions about the chat room, the trading room here that we have with Nick, let me know so I can go ahead and answer them. And make sure to put them on the chat, not on the Q&A, so that everybody here can. Okay, Diane says, okay, why can't you sign up, Diane? What's going on? Is the link not working? I'm in the link right now. It seems to be working. Keeps clocking. Try refreshing it. But yeah, the link seems to be working, at least from what I tried. Let me go ahead and check here, Diane. But also I'll put in the link here for you guys one more time. This is going to expire at midnight, correct? Yeah, worst case scenario, Diane, you can always email me. And so basically, this is what we do in the chat room all day with Nick. We go over trades, we go over strategies, we go over his picks, over your picks. It's basically like a three-way street. So like you talk to Nick, he talks to you, and you also talk with the other community members. I mean, you guys seem like you were having a blast in the chat here. So that's basically what you get in the chat room as well. We have the same mindset and community there. Okay, so SS Cisco is asking, yeah, so I mean, this is pretty much full on options, correct? This is for options. You're going to learn how to be a complete options trader, not just a call buyer and a put buyer. You're really going to be able to understand how to use options in different ways, not just if a stock is going up or if it's going down. You're going to have a better understanding of options. And that's always good for any options trader, because I started doing that, just calls and puts. And eventually, once I started doing like credit put spreads and all that stuff, everything changed, and understanding it, which is all, thanks to Nick. No, there's no monthly. This is for the year. It's for the full year, Martin. So basically it's a one-time payment. You keep the discount. So basically you keep the discount at the renewal as well. So next year, even if the price increases back to, 4, 5, 6,000, whatever it can increase to, you would keep that 78% that we do have available until midnight today. And so basically in the chat room, when we're doing live trades, if you have questions, you can always ask them. We have the sessions there on Sundays. Yes, Sasha, it's every year. It's year after year. So it's basically a yearly subscription to Nick, and the chat room, the sessions, the trades, the education. Now, every trade that he gives out comes with education, every trade, every single trade. And also you're going to get like specialized options education trades, beginner, advanced, intermediate, way advanced. And I know people that have like been doing this for 30, 40 years, and they enjoy trading next to Nick because they like trading next to people that know their stuff. It's that simple. And it's not just about options. I know maybe some of you guys are at that level where you're trying to learn about options, but once you've been doing this for decades, you're way past that. You really understand the economic numbers, the implications of those numbers within the stock market. Nick is also looking at Ethereum, Bitcoin, oil, natural. Well, like we're looking at a lot of different things, and these things that we are basically going over in the chat room and as a community, they help us become better traders, not just buying a call for buying a call or buying a put for buying a put. We're basically trying to teach you guys, how to become better options traders. So Eduardo is asking, I'm interested in joining, but I'm new to trading. Would you recommend I become proficient in trading before learning options? If you really want to trade options, not everybody jumps to option. It just really depends. If you're trying to do that, my suggestion would be to do it only with the right mentorship, with the right person that is there to guide you and help you and actually do that, and not just say it. That would be my suggestion if you want to do options, because if you do it on your own, very likely you will blow up your account. And that happened to me about 2 times when I started. And it happens to a lot of options traders that I talk to, a lot. So it's a very common thing. It's not spoken a lot for obvious reasons, but it is a reality. It is a very typical reality for the retail trader. So it's very important that if you're starting, you do that with a community of verified traders, not like if you're going to these pump and dump chat rooms with bots and fake profiles. You actually have verified traders here in the chat room. So that answers your question, Eduardo. Let's see, Brian. Okay, let's go to some of the questions here from YouTube, guys. How can one join the room? Johnson. Okay, let me post the link on the YouTube, Johnson. Hi, Kashima, what's up? Okay, Johnny J, give me a call, okay, for that particular situation you got. I'll put in the information there. And Brian Schwartz, no trial. Yeah, so Brian, we have a 7-day money back guarantee. It's in the link. If you click on the link, it'll show you everything there that is included. The laptop is as well. It is a complimentary gift, a new Google Chromebook that we're going to send you guys as a gift, as a thank you for being loyal and for choosing Benzinga to help you here with your options education and options trading, right? Because it's trading and education with trading. Rhonda is, okay, Daniel, do we learn in Benzinga school also what a strategy, I mean, that would be a separate conversation, Daniel. We're doing the options inner circle here with Nick. So Rhonda's asking, does the membership include subscription to TradingView? No, it does not. That is a totally separate company that is not with this chat room, at least not with this chat room. Does the membership? No. Yeah, so it doesn't. Do you guys have any other questions here that I can help you with right before we end up closing the stream? And I got a couple emails. I think I'm talking to some of you guys as well here. I think Daniel. Yeah. All right. Yeah, Daniel, absolutely. And if a lot of you guys called, so I'll be reaching out to you guys either later today or tomorrow. But yes, this is basically going to be for the full year. So the SE Rocks, it's basically just it's going to be a free, not a free, but like a clean new, like you're going to install your own things in that Google Chromebook. So it doesn't come pre-installed with anything because it's new. It's directly from the factory. So, you basically do whatever you want with it. You're not renting it. Like, it is yours to keep for life. Okay. That's how much we want you to succeed and have the tools you need. Go ahead and use it for a trading journal as well, right? It's very portal. I use it a lot when I'm going out and stuff. So yeah, Lorenzo, we went over some of the platforms, but that, everybody has their own taste in that. So, all right. I want to learn how to trade options. If I join, can someone trade side by side with me? That's exactly what we do every day. We trade side by side with you. We give you all of the sectors that we're looking at, like a plan for the week, a plan for the day. It always comes out very early in the morning. We also have recaps on Friday. I mean, recaps every day. This is what Nick does like all day. He has sessions, chat member sessions only on Sundays. And then he's on the chat room sending you guys videos of trades with education for those that are wanting to start. And for those that are very new, we have a section that is just for, well, I mean, it's for everyone, but you guys basically have access to sessions and educational videos that Nick made just for you guys, just for you. This is nowhere on YouTube or anywhere. These are sessions that we have only for you guys. So that's something that helped me be able to understand the conversation, because you need to understand the language if you want to have a conversation. And part of that is knowing what you're talking about and knowing what it means and the implications and the risks associated with each type of trade and all of that. So that, we do have a section just for you guys that want to absorb the actual knowledge before you start having, that kind of conversation, which is part of the process. It's part of the process. So yeah, we have a lot of those for you guys. All right, guys. So let me know if you guys have a couple questions here. We're going to be closing off the stream here in a couple minutes. Yeah, you can still, even if you're new, I mean, especially for new people, because I'm like 90% of options traders will blow up their account and maybe not return to the market. So how many times people can go through that's something different. But I'm just going to show you guys something really quick here with the chat room. All right, I think you guys can see that. Let me know if you can see that, if you can see the actual chat room. Basically here, yep, so there you have Nick's session when he's putting up the videos and all of that. And that basically you can look at him when he's answering every single question, if he's giving you a ticker with an explanation. GM fell into support. Remind me to see if there is a trade tomorrow with links to the charts. So all that is basically given to you. Like, this is a given. This is a guarantee. So here you have charts. And I mean, you can scroll over here for quite a while because he does have a very good conversation with people, with everybody there, actually. So, it's something that you can go ahead and enjoy as well. You'll see, I mean, this is another video, Twitter opportunity. I mean, these are trades, as you can see. So we're going to go ahead, guys, and finish up the stream here. And feel free to call in if you have any questions, or if you guys, wanted any specific questions on how maybe this can help you. And we'll definitely be more than happy to help you guys. So my information it's there in the chat room. Okay, let me just answer these last questions. Yeah, so midnight Eastern time. So the offer expires at midnight Eastern time. So that would be midnight, yeah, in a couple of hours. I think, and this is basically what I was referring to in the chat room. You can see the videos, the graphs, all that stuff. So I'll drop here. So Sule, yeah, I mean, even if you have a full-time job, it works, because what a lot of people do is that they go to the sessions on Sunday and they get pretty much like the full update, meaning the full update, we're talking about adjusting the portfolio, digesting the news, pretty much a gather round, like a bonfire, right? And we all gather, we go over what's happening in the markets, what is the best way that we can approach the volatility in the markets so that we're not surprised, and we're following economic numbers, we're looking at the calendars, we know what is coming up, we're not trying to get surprised by any single event. So I mean, that is one of the benefits of trading with a community, right? Well, a community that is is definitely, into trading, right? For retail traders. This is for retail traders. And yes, there is a free laptop, Joel. There is a complimentary. I mean, yeah, it's a complimentary Google Chromebook that is going to be sent to you guys as a courtesy. As a courtesy. Hey, Cash Money. So just call this number here that I'm putting here, and you're definitely gonna get a call back tomorrow. Okay, that's Rodrigo's number. That's my number. Yeah, so this is basically, I mean, there's another video here from PayPal that he put out. You should, Sule. It's really good for options traders. It's just trying to do it on your own and not seeing any positive results. We just got to put the ego aside. The market will destroy your ego. So basically, and I mean, it will happen to every single retail trader. So it happened to the best of everyone. Paul Tudor Jones as well blew up his account twice. So, and now look at him. But these are lessons, right? You don't want to learn the lessons by blowing up your account. It's not, obviously, yeah, you definitely want to do it a different way and have a mentor, somebody that can guide you through that process, answer your questions, and especially because there's a lot of misinformation out there with options. People, young kids out there doing videos on TikTok and all this stuff. So you got to be careful. If you want to learn, you have to learn from people that are actually doing it successfully with a verified track record, not somebody who just want views, pretty much. Does that make sense? Joel, I know what you mean. Yeah, there's a lot of places out there, but at Benzinga, we are definitely we're focused on retail. That's our thing. It's been our thing. It's always going to be our thing. It's our motto. We love retail traders. I am a retail trader. I trade. I've been trading for several years, and it's something that we all do together as a community, right? Because we do want to provide that for you guys, a good environment for you guys to trade, learn, profit from trades and all that stuff, and make a living out of it, or part-time income, whatever it is that you want it to be. So I mean, these are pretty detailed notes from Nick's on VIX. That's pretty interesting. He always covers the VIX for the volatility. TXN right there, right there. I mean, on the video you can see that's another video, right? So you can see he's constantly this is all today. Everything I've been scrolling has been in the period of today, literally in less than 1 day. So you guys pretty much get all of that. And don't forget, you get the sessions on the weekends, which is just for chat members with Nick. And you go over trade strategies, any questions that you have, and anything else that you might have. I know a lot of you guys had like basic questions or specific questions. All of that gets addressed in the chat room and the sessions, everything. And some of you guys might want to hear about your stock that you're in because you're in a trade. So everybody wants something different, and everything that you want basically gets a response, gets a reply. You get a lesson, you learn. It's all about giving you guys positive education so that you can learn from it, and learn from that to the point where eventually you're going to be able to spot these things on your own and just get confirmation from Nick. Sula, there's not really an expected minimum. There's people that I've seen that have joined with accounts, in the $500, $1,000 range. I mean, I bought calls from one of Nick's picks and it cost me like $300 for those calls. So yeah, it's always going to depend by trade, if that makes sense. And so it basically would depend on the type of trade, because some stocks might be a little bit more expensive. Yeah, let me put in the number there. Sorry. I was in the YouTube chat because there were a lot of people asking questions there. Okay, I'm putting the number now. 1 second, guys. It's a Google Chromebook. It's the newest one they have. We're literally getting it straight from Google. And I just put the number there on the Zoom call, on the Zoom chat. Does he cover PMCC? Can you explain what do you mean by that, Chuck? What do you mean by PMCC? Paper money? What do you mean by PMCC? Is that a type of trade? As far if you're talking about diagonal trades, he does that. Yes, Nick basically does diagonals, iron condors, butterflies, straddles, CPS, covered calls, everything. He does everything, but obviously he can't whip out all these different types of trades with like, I mean, remember when we did the first survey, like, you know, who here is like a beginner? No, if somebody's beginning, it's really not a lot of value to give them a whole bunch of complicated trades. But if you are at that level, Nick will give you those trades, right? It just depends what the audience, you know, what they want, what they need, right, and whatever they ask for. So yeah. All right. So there's a lot of questions here. All right, Daniel, we're going to talk by email for sure. Hey, good morning, Shalodi. So yeah, if you sign up today, K and Z, your last day would be 1 week from today. So the day, it's a 7-day. Yes, we have a 7-day money back guarantee. So whichever day it is, 7 days, and that would be like your money back guarantee period. Countdown. Yeah, it probably is Pacific. I think it's Pacific. Yeah, it is Pacific. That's what my producer's telling me there, writer. So the deal expires at 4 a.m. correct at that time. And Chuck, let me know what is PMCC. Diane, I put the number there in the bottom. I was in the YouTube chat because there's a ton of questions there, and I'm just trying to go through all of them. No, Cisco, it does not include Trading View. Does not include Trading View. Where is the Zoom chat? Diane, the Zoom chat is where you're typing. Where I don't know if you can see that. So like where you just typed, you're putting it to host and panelist, but I'm replying there to everyone. Do you see it there? So yeah, that's the number. Scroll to the bottom. Scroll to the bottom in the Zoom chat, and it's there. And I'm posting the link here again. So PMC, poor man covers call. That's what you're talking about, Chuck. Yeah, he does that. I mean, it's just one of the many different option trades that we do in the chat room. Yeah, so I mean, covered calls, credit put spreads, straddles, condors, it doesn't matter. They're all basically types of option trades that we do in the chat room with Nick. Lorenzo, you're gonna have to ask them. Okay, guys. All right. Last thoughts on DWAC. It's gonna go higher, but it's probably gonna go lower before it goes higher. Yeah, you could. I mean, yeah, DWAC was a pretty insane trade. I was trying to, get into the morning. It was pretty crazy. But yeah. All right, guys. So it's been fun. It's been great here being with you guys for today. It was a great session with Nick. I hope you guys enjoyed everything here. It definitely was a fun experience here. So feel free to reach out if you have any questions. The information, number, email, link to join before midnight is in the chat on both Zoom and YouTube. So just want to give you guys a thank you and a warm, great day tomorrow trading. So thanks for joining, guys. We appreciate you. And we'll see you guys here on the next time, guys. Thanks. Bye.